Hello and welcome to another stream with me, Christian Rauchenwald, on this beautiful or not so beautiful Monday morning. We are back again to look at GameStop using Elliott wave theory that you can learn by reading this nice, decent, confusing book. Link to it is in the description down below. There's also a free online version which we're going to use throughout the stream a little bit. And yeah, so that's what we're about to do. Let's see how it goes. Now, where do we start? We start by switching here. Yeah. And you may notice, I'm not 100% sure how we left it on Friday, but you may notice that it looks slightly different because by now, I think on Friday we still had our wave 4 point down here, but I spent some time reading and looking things up and rereading parts and reading parts that I initially skipped and so on, and looking at charts and whatnot. And based on that, I think this is the most accurate labeling. Now on Friday when we ended things, I knew that we had a diagonal here labeled already, or I know that we had the diagonal here labeled already, although I wasn't fully happy with parts of it. We're gonna clarify that in a second. Hi, yeah, I don't know how to pronounce that, but welcome and great to have you here. So I wrote it on the Discord a little bit. Just need to look it up because I don't remember everything. But basically what we had before was our wave 4 point was here. So that down here was an ABC, wave 4. This up here on a lower time frame we labeled as 1, 2, 3, 4, 5. Although I can also label it as a zigzag, as we can see, currently on the hourly time frame, by the way. And then we had our diagonal here, and I think 15 minutes is where we can go, where I personally wasn't happy because we break through here. Yeah, so I'm not 100% sure about this point, if it's here, likely it is, or if it's here. And why was I not happy about that? Because on page 86, I think, no, page 90, we have the rules for, so in the book, page 90, we have the rules for triangle, but I'm actually gonna open it up here. So that's the online version of the book. There we don't have page numbers, but we have chapters. So it would be either, yeah, here, guidelines of wave formation. And then somewhere here we should have, no, not guidelines, next section. Nope, nope, nope. But it should be guidelines of wave formation, chapter 2. Or, but the end of chapter 2 probably, or a summary. No, there we go. So here we have our rules and guidelines, and somewhere here we have triangles. Now, at least 4 waves among wave A, B, C, D, E subdivide into a zigzag or a combination that we have here. So we can label this as A, B, C, or technically that could be point B here, although that, no, this here has to be point B to make this a nice line. Then wave C never moves beyond the end of wave A. So wave C, wave A, and wave A has a low at 163.26, and that low here is 164, so that's okay. And wave D never moves beyond the end of wave B, so wave D doesn't move higher than wave B. And wave E never moves, and that's the point here, and wave E never moves beyond the end of wave C. Wave C, wave E, so that rule is technically broken. Although, and I'm just gonna duplicate that tab so we keep the rules open, yeah. Although, yeah, we're gonna get to that, so blah, blah, blah. Never more than one complex subwave, in which case it's a zigzag combination or a triangle, which technically could be this wave here since it's longer, and could be some kind of, I don't know, like haven't checked that, but technically A, B, C, something, something, something. So, but yeah, so keep that in mind. And then technically this would be a barrier triangle, which brings us already to one issue, and that should be Hi Ben, great to have you, and thanks for texting with me on the weekend on the Discord server. So for my confirmation bias, yeah. Where would you have that? Where would we have that? Corrective waves. If we look here, there we have somewhere the graph for here, this one. It's kind of like a little small here, but if we look at that, we technically are looking at a barrier triangle, and in our case it actually is this. So our wave A comes from the top. However, our barrier is at the bottom. Yeah, so if we look here, not here, if we look, we see that our wave A comes from the top, and but our barrier is at the bottom, which is kind of, from a logical perspective, what does this mean? If we think about it, it means we had buy pressure, sell pressure, then buy pressure, but not enough buy pressure to go higher, sell pressure, buy pressure, but even less than before, sell pressure, and eventually the sell pressure here even broke through. So from a logical perspective, and that's the one thing where I'm not 100% sure about, is it would actually mean that that we should expect a drop to the bottom. However, overall, since this would be the end of our wave 4, we should expect a drop to the upside. So that's the only thing here. The triangle pattern fits nicely. And I'm going to show a few other things that confirm all of that. I'm just really confused by having the line here at the bottom. Yeah, that kind of like throws me a little bit off. And so that we have here. And in terms of barrier triangles, a barrier triangle has the same characteristics, except that wave B and D are essentially at the same level. Yeah, so it would indicate that B and D should be the straight line, which might also be the point to say we don't have a barrier triangle. Yeah, so maybe it's really just pure coincidence that those 2 points on the same line, and it's not really a barrier triangle, but it's just a regular triangle like here. Yeah, but then again, wave E shouldn't go lower theoretically. However, if we keep, and I'm gonna duplicate, so I keep pages open and look at, that's gonna be a little bit tricky to find, but let's see if I can find it here in the online version. Not here. Okay, let's look from here. Oh, no, that's other approaches, so it's definitely before that. Yeah. Here. I have it was figures A, so it was something different. Figure A. No. I'm sure we're gonna find it. Okay, already through that. Then was it here? That here actually answers one of my questions, because I was always, and I was pointing it out pretty much in every stream, that I wasn't sure about like our wave 2 violation here, that it goes lower than point number 0, and my explanation for it was that technically the company already existed before it went public, and therefore there would be a value that we just don't see. While I'm not able to find anything very specific that confirms exactly that, the fact that in the book over and over there are examples used where previous data is just generated from other sources. So technically, if we would have the yearly audits of GameStop, we could technically compile the previous data before the IPO to also come up with an evaluation. And so therefore my assumption that the wave actually started earlier, I think, holds up quite nicely. And yeah, but that's not what we're looking for. We are looking for, where is it? No. I'm gonna check quickly in the book so I know what picture I'm exactly looking for. But I think it was page 222, which would be, so we are in the wrong area. It should be in the appendix. Yeah. So just have to find it there. So yeah, like here we have a triangle where wave C breaks through, so technically violates the rule. Yeah, so it goes it was about going beyond point A, and it's an expanding triangle, so not violating. Here we have one example, although the horizontal line is on top, yeah, but we can see that wave E here breaks through before it goes up. And that example nails it even better, because again, initially we had, if we zoom out again, we had wave 3, 4, and thought we are already in wave 5. And we labeled this here wave 1, and that would be wave 2. And we would get the warning that a triangle is very rare in a wave 2. It's possible, but very, very rare. According to our one-page cheat sheet, and I'm just gonna use my phone as bookmark here for a second. According to our one-page cheat sheet, actually wave 2 can never be a triangle. Yeah, so it's literally not a triangle, but apparently it can be in rare cases. And also, if we read about triangles and about double threes in the book, so back to the book, we're gonna keep this open. I'm gonna open up another tab, and then we need there to go to not motive waves, but actually corrective. And if we then look here for triangles, we can find a triangle always occurs in a position prior to the final actionary wave, which means it always is the last element and ends our wave 4. Hi, Captain Caliente. That's an easy to pronounce name, yeah. So the triangle is always the end of wave number 4, yeah. And if we then go further and look at combinations, then it basically, and that's actually interesting. Where was it? For the most part, a combination is horizontal in character, blah, blah, blah. There's never more than one triangle. Recall that triangles occurring alone precede the final movement, blah, 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 so that even within a double free, triangle is always the last part. And basically somewhere in here, it also mentions that a triangle or double frees usually occur, or it appears that they just occur to increase the duration of the correction. So, and it mentions somewhere that usually, like, not sure where, if I find it, let's see, double zigzags, blah, blah, blah. Double and triple frees are different from double and triple zigzags, not only in their angle, but in their goal. In a double or triple zigzag, the first zigzag is really large enough to that should probably be isn't, yeah. So it's not large enough to constitute an adequate price correction, and with more zigzags it actually gets to the right size. In a combination, so in a double 2 or a double 3 or triple 3, the first simple pattern often has an adequate price correction. The doubling or tripling appears to occur mainly to extend the duration, yeah. If we look here, our first zigzag has the required price correction. It actually went a little bit lower because if you remember from the point up here, the predicted area was like 131 to 150 or so from the zigzag, yeah. And therefore, the other part here, this zigzag and the triangle are just to like extend the duration. And as a result, that's also one thing that I somehow missed and ignored all the time. I remember during our first streams when Mario was the first person that I think here pointed out that wave 2 shouldn't be here, but here. And I was like, no, it should be the lowest point, blah, 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 and so on. But actually there are two things. One simple word that I didn't pay too much attention in the book, to be honest. It's orthodox and unorthodox, yeah. So in our case here, now this would be wave 3, and that's the finish of our wave 4, I'm like fairly certain. And that point 4 here would be the orthodox end of our wave 4. However, because there is a lower low, this would be the unorthodox point of wave 4. So that one is the one that fulfills all the requirements, and that one would be the lowest point. Yeah, so too broke to buy the dip, but if it stays low till next paycheck, I'll scoop some more. I'm not sure that it will, because I mean, you just joined, but quick summary, we used to have 3, 4 and 1, 2, and a warning that tells us that the triangle is very, very rare in a second position. And after some time reading, looking on the chart and so on, I actually think we have a triple 3 here, which occurs in 8% of cases according to our cheat sheet, which consists of this zigzag here. Yeah. So, and we can actually check how nice that zigzag is. If we take that line and we see here, it's literally almost a perfect zigzag. So the wave C is almost identical with wave A. A second zigzag here, which is smaller and faster, which usually would be the case in a triple 3. Although the points here on the hourly chart are a little bit moved, but should be up, wrong, didn't want to do that, line. So it should be from here to here, and then wave 2 or wave B starts up. Wave B would start here. And again, while the angle here is not perfect, you see that wave B or wave C actually is perfect in height in terms of, or length in terms of making this a zigzag. And as a result, to finish that triple 3, we have our triangle here. Yeah, yeah, not from that starting point, but basically, yeah, like let's try like this. So basically like that. And if we extend it here, it almost matches up with the starting point, which is kind of okay. There are also other things. So I want to go back here to the example, not this one, not this one, not this one. Did I close that one page actually? Yeah, this one. So that's one example where Elliott also, they have a double 3 here. So not a triple one, or actually is it triple? No, A, B, double 3 here. Or could be triple. A, B, C, A, B, C, and then their triangle starts. Yeah, so it's actually the exact same pattern that we have, just ours is more sideways. And the interesting aspect down here is, if you read that, a surprising element of time symmetry is also present. Yeah, so the short lines, so blah blah blah. What was the first one? 3.5, and okay, so the long lines, yeah, so the bull market lasted 5 years and 5 years, blah, 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 the 3.5-year bull market, blah, blah, blah. Okay, in the book, I think that sentence is a little different, but the point is that that short line here is the same length like this in terms of duration, and that long line here is the same as duration like here, yeah. Now, if we look at our nice, super nice corrective pattern here, I'm gonna need to zoom out a little bit, up too much. And I take a line, and we take our line here, you can see that it's 3 days. I'm going to remove it. And we take our line here, you can see that it's 3 days. We take our line here, since that's like how we would create that channel, you can see that it's 2 days. And we take our line here, and we would have to not precisely go to E, but basically on the, basically go through point D, but also stop at E. You can also see it's 2 days. So for us, this is 2 days, this is 2 days, and this is 3 days, and this is 3 days, which literally, in my opinion, makes this the exact same as it in our case, like pattern. Yeah, not a very common one, which kind of like explains why we were struggling with it. Like, we had a nice zigzag and assumed it's the end of the wave. We were able somehow to label this on the smaller chart as 1, 2, 3, 4, 5, although it can also be labeled, and in this case it should, in my opinion, as a zigzag. And I think that part with the 1, 2, 3, 4, 5 was kind of like the bigger issue, which made us expect that we are now in wave 2, when in fact I think that this is the end of wave 4. Now, again, as a result, if this is the end of wave 4, we go up from here. But it doesn't stop there as far as it goes to confirmations. If we duplicate that, page and look up, have to look for that in applied ratios and triangle. No, not here. Okay, let's see where we find it. There we have it. Triangle, no. Multiple wave relationships. Okay, there's also no triangle. Yeah, I don't know where in the book it is, but the point pretty much is that this wave, or this part here, should be, I think, 6.18% of this part. And we can do that if I put a Fibonacci retracement here. Then we basically, and then all we do is basically we move that sideways, but I try to keep it on the same 204.30 high. And I'm gonna put it here, and we can basically see, no, different retracement. Oh, no, my mistake. Actually need to look it up. Wave A should behave similar. Somewhere it was. Let's see where we have it. It should be in the ratio stuff, yeah. Let's see. I mean, that, because that would be, or maybe at that point I was already too sleepy. 190, or too confused. 139. Let's check. 139. Ah, yeah, page 139, ratio analysis. Let's see if we find it in the book. And that's chapter 4, ratio analysis. So lucky, maybe we find it in here and I just didn't notice because we're looking for a picture. That here, so we have, that is 1. So from the starting point to A is 1, and B needs or should be 6.18. Yeah, now if we go here and we add a retracement, so basically again, this here is our wave 1. And then as a result, our, it's not perfect, yeah, you see, but basically if we go from point B downward, it's a little bit more than 6.18. It's closer to the, yeah, but also not 78. So it's like closer to like 70, but still comes very close here. And then we have the same wave A to B and wave C to D. So if we remove that, and basically this here, if that's 100, then that here from D to C, and again, it's not perfectly 68.1, but you can see that it's very close. Yeah, so, and then here with wave E, we actually, yeah, that we don't fulfill because our wave E obviously goes longer. So unless our wave E spot would actually be here, yeah, so unless that's wave E, and I don't know how to describe that then, yeah, but technically, so like that obviously is longer, but technically we could measure this. So wave B to C should match, so oops, wrong. So this here should technically, which it doesn't because we see that 61. However, if our wave E point would be this one, up, then we see again that our wave D point is almost exactly at the 61.8. It's like a little, again, closer to 70, but still. And I think while we don't hit that nail on the spot and while we have that breakout down here, I think that's the pattern that really fits perfectly. We have a perfect zigzag, like with almost perfect length here for the wave C. We have another almost perfect zigzag where wave A and wave C are pretty much identical in length. And we have an almost perfect triangle at the end here that pretty much matches the triangle that we see here. And here, if we look, or yeah, here it's labeled as 1, 2, 3, 4, 5, but that's also A, B, C, D, E, yeah. And if we look closer, we see that here wave E also breaks out to the bottom a little bit before it goes up. So it's literally the exact same case here. And in case you're wondering, the bottom and the top here, it's the same chart, it's just plotted differently. So here it's on constant dollar and there it's using a different value in quotes. So that's why here it looks like a barrier triangle to the top and here looks like this diamond shaped thing, but basically it's the same. And so yeah, like the only difference that we have and the only, although I also found examples for those, by the way, so in figure A1, which should be a little bit earlier in the book. Where are we here? Yeah, let's check. Figure A1. Here. I also found almost barrier triangles like this one where it then breaks up to the top. So where the horizontal line is at the bottom, but it breaks out to the top, which would confirm. And I found a second one where it also is like this. So I'm fairly confident that like this is what we're looking at, and this would indicate that from here we actually go up. So because the triangle is finished, I don't see how this could be, hi Josh, I don't see how this could turn into any other pattern. Maybe it can, and I just don't understand how, yeah. But technically this is an A, B, C. This here I can label as A, or maybe, yeah, like, that went up here, so I could label it technically as A, B, C as well, or A, B, C. This here, so this here would be a little bit trickier to label, but technically also A, B, C, although the relationships of the zigzag are not as perfect. This here, A, B, C, also not a perfect zigzag, but still possible. And yeah, so the only thing that I can imagine is that this triangle actually turns into a bigger triangle, and somehow, yeah, so that I'm kind of like labeling it too close and it actually is some kind of bigger triangle, although I don't know how that should work out, because in that case, if that's only part of the triangle, then it would need to be A, B, C, so that would be wave A of the triangle. And then actually we would need to have a more upward movement here to get a wave B. So like I really think that's it. So that's where we are, and I actually expect that from here we go up. Maybe it drops a little further. Again, as a reminder, yeah, like where was that one now? Here in the September section. Yeah, no, not September. Yeah, so there is also first the drop out, and here you see it a little bit better, so it drops out and then it shoots up as, and it's also in the same situation. It's a wave 4 that ends, and from here it goes up. And it's also the same situation that we have an unorthodox low, which would be the unorthodox 0.4, and this here is the orthodox 0.4. And same here, so this would be our unorthodox 0.4, so the lowest point, when that actually is our orthodox 0.4. Yeah? So I'm just reminded again how flexible corrective patterns are and how challenging they are to label. But considering that this, and I know I've said this before because previous things also made sense, but this actually makes the most sense. And the nice part is there is no such thing as a quadruple or yeah, like quadruple free. So the only thing that I think I could be wrong about would be that this triangle could look slightly different. So, and as a result, it might have a little bit more downward movement, but I actually don't expect it. And this should indicate the end of our wave 4. And from here, we actually go up. Now, let's check today's pre-market, since we still have 5 minutes. And GameStop says slightly in the red. Yeah, so not that bad, less than 1%. And yeah, so I'll just have to wait and see in 5 minutes how it actually turns out. But yeah. Hi David, great to have you here. So in case you just joined, quick recap, what we had here, wave 3 to wave 4, change to wave 3, wave 4. Basically, because with the triangle here, we had it first, so ours was, I'm gonna check if I have a screenshot of that real quick. Should be April 9th. Ah, yeah, there we have it. So I'm just gonna, oops, didn't want to do that. Back we go, move that. So that's how we had it, wave 3, wave 4, 1, 2, and then the warning that triangle is very rare. According to the book, it actually never happens, yeah, but very rare, so shouldn't be the case. And I think the part that really confused me here or threw me off is that we were able to label this as 1, 2, 3, 4, 5. So to confirm this is an impulse, but we can also label this as an ABC. And when we label this as an ABC, it's obviously not a wave 1. And voila, suddenly the whole thing actually turns into the same thing that we have here. Here it's nicer to see, wave 3, then we have in that case, yeah, it's like already a double zigzag here, I guess, yeah, so ABC and then here. But basically we have one correction, which in our case is this perfect ABC, and instead of an impulse, we have then another ABC and followed by a triangle, yeah. And basically the whole thing is therefore a triple free that should end here with that point. I like, I mean, I went through if you just joined, I really recommend once we're done for today that you jump back and watch the first 15 or 20 minutes, because I walked really through confirming like the lengths of this and lengths of this. So those are really perfect zigzags, and also the Fibonacci ratios between this wave and that wave and this wave and that wave and so on. And the only thing here that's a little bit off is wave E, and that is, however, also the case in this example here. It's also a little bit off. And in the book there are 2 or 3 other examples where this also is the case. And besides that, well, basically the only other thing that's a little bit annoying here is that we have our barrier at the bottom, whereas, which there are also examples for in the book. I think I have one open somewhere. Maybe I closed it already, yeah. But basically there are also examples in the book where we see the barrier at the bottom and the price goes up. However, in the initial picture, it would, although our price obviously comes from the top, so our wave starts like this, yeah, but it's a little bit misleading that the graphic here illustrates price from the barrier at the bottom and then the price goes down. And from a logical perspective, one could argue we have buy pressure, we have sell pressure, we have not enough buy pressure, we have sell pressure, we have even less buy pressure, we have sell pressure, and that's why the breakout is to the bottom. But if this is a wave 4, and if this is a triangle and it looks like a triangle in every aspect of the way, then it has to be the last pattern here before we start our wave 5, which will then be our 1, 2, 3, 4, 5 impulse wave going up. That should take us, I think if I'm not mistaken, that should finish off, what is that finishing off? That should finish off, okay, I need to zoom in a little bit more, daily. So this 4, 5 finishes, our wave 3. So that should finish off our wave 3 of 1 degree higher. And yeah, I'm gonna look at screenshots again. Yeah, so he doesn't have it there anymore, but from the monthly chart, it's basically 2 and finishes off our wave 3 here. Yeah, so that's where we should be going. So basically we should have a 1, 2, 3, 4, 5, although not from 60 because that was obviously his second alternate labeling. Also not from here, but yeah, like we dropped a little bit further than the 170. So from 150, basically we should see a 1, 2, 3, 4, 5 that takes us up there. And if I recall it correctly, after a triangle like this, it should be a very strong movement. Maybe mistaken, but yeah, like at this point, some parts get a little confusing. But from all the patterns that we had so far, this is literally the one that fits so perfect that, yeah, I don't know what else it could be if it doesn't work out like this. because yeah, like the only exception, maybe this turns into some bigger form of triangle, but other than that, the whole thing fits just too nice. And yeah, we'll have to actually see or it actually should already start. 158.04. Okay, no price update. Flip sucks. Gonna restart Motive Wave. I set up my interactive broker account, but because I'm still waiting for the funds to clear, so I sent some money there. I don't have the data feed from them yet, and I'm waiting on a reply from support to clarify which feeds I need to subscribe to get like US and European stock chart information. And so in the meantime, we still have bar chart as a fallback, but we likely will not get, yeah, okay, so we will have to open a new chart here because obviously I don't get the data from interactive broker yet, so we'll have to actually open up a new chart. Although I still should get the tick data or not, like it should still, at least here, update 1616, no. Yeah, and don't know where that, why they are now here, but let's get rid of them. And yeah, basically we'll have to add a new chart, but from, okay, can I do this like that? Okay, so we'll have to configure workspaces, quickly add bar chart directly again, so that we get the data from bar chart. And just need the password, bar chart, there we go. And make that our number one for now. And that might actually not work because I have bar chart now added twice. So this might cause a timeout here, and then I would need to remove it from the interactive broker fallback for now. And that also answers the question why like Robinhood, although Robinhood sucks, we know that, but like brokers like Robinhood or eToro and so on are really great because you don't have to worry, or wave basis versus Motive Wave, yeah. You don't have to worry about that stuff. You don't have to worry about setting up your data sources and getting the right data, but you just, yeah, like can do your thing. So I will need to restart that because we're not connected. So yeah, we're already at 161. So as said, I expect sharp movement upwards. Luckily enough, I shared that prediction already. I'm gonna check so that nobody can say it was last minute. On 2 days ago. 2 days ago, I already came up with that labeling. And yeah, let's see if it holds up. That's the bigger question, of course. So connect. And if somebody has a free minute and maybe has a book handy, it would be nice to look up so that we can try to determine, or we actually already know where we go, yeah? What, yeah, so, yeah. Sucks a little, basically have to, yeah, sucks really, but yeah. Have to remove pretty much all of that, remove ticker, and also that, and that as well. Since from interactive broker, again, my funds haven't cleared yet, so I don't get the data from there, so we'll have to look from bar chart. GameStop, there we go, which means our labeling just disappeared. Much fun, so wow. And yeah, it's gonna suck. Where is my screenshot? I'm gonna put that on the other screen. So it's not this one, but yeah, that one will do. So that here was 1 and point 2 was, I think, this one. And our wave no, let's start over from monthly, or 3 months in that case. So we said this is 1 violation and we're still part of wave 3. So, and with that we can go to maybe weekly. All right, let's go to daily, and yeah, have to set that point straight. That would be like such a huge improvement if they fix that you have the, oh wait, 2007 somewhere, that's where we need to go, look. That you have the points match properly, yeah, so that obviously needs to go here. And then back there, 2003, that would need to go here, and back up here. We'll basically have 1, 2, and that wave, I'm gonna check screenshots. Only has a wave 3 so far. Okay, so that wave should technically have a wave 3 here, and our wave 4 would now be this one by our definition. Yep. And then we have another 1, 2 that starts from here and basically has its 1 here, if I'm not mistaken. And the 2 in the low before here. So the 2 here, and then 3, 4, and 5. Yeah, so that's the pattern we have here. And with that we can jump on the hourly chart, and we'll have to move a few things again. And point number 4 would be here. Point number 3 would be here. That might be okay, okay. Oh no, 2 would be that low here. And the starting point is, yeah, almost okay. It should be this one. Okay, so with that we have that in place, and yeah, then we had a zigzag here. So that goes down till here, and another zigzag that goes from here up, from here to up here, and yep, and then a triangle, tools, Elliott wave, triangle that goes from here to here. Yep, and yeah, that those points are not set properly somehow, because they, yeah, and then we should label that whole thing as combination, tools, Elliott wave, combination, and that would then be like this, yeah. And then if the points are matched or set properly, which they currently apparently are not, so, yep, and now the blue one. Yep. So that's what we're looking at. And let's try to zoom out a little bit. So I don't know, like let's say 2 weeks. No, more than 2 weeks. Let's try 1 month. Yeah. So that's what we're looking at. So instead of having, wait, what? Hourly. Okay, here we have the high at 400, which was then followed by the buying restrictions, which takes us to that low. We recover, complete our wave 3 here, and yeah, that's what we're looking at. So thanks for all your hard work, man. Enjoy the streams every time, even though it's 11:30 p.m. for me when you start. Hi Jake, great to have you here. Yeah, Pooh, respect that you can stay awake with those that dry stuff. I always think that my time difference to the US already sucks, so with like being 8 hours or so ahead, but apparently you've got it worse, so haha. I mean, no, I feel pity in quotes, so sorry for you. But yeah, like great to have you here. And green pre-market, 1 minute till live, toilet roll on the ready, and yeah, so like as said, so this is really the pattern that makes the most sense for everybody that joined later. Once we're done, or when you decide you are going to call it a day, I really recommend that you watch the like first 25 minutes of the stream again, because I basically walk through confirming those patterns and showing how there are examples in history that are pretty much identical, how perfect that zigzag is, how perfect that one here is, how perfect the Fibonacci relationships of almost all waves in this triangle are. And as a result, because a triangle is always the last corrective pattern, it cannot be that there is another corrective pattern. The only option would be that this triangle somehow isn't finished and should be labeled differently, which I highly doubt, because again, the Fibonacci relationships between each wave also are almost perfect. And therefore, we would have to, or we would expect to see 1, 2 start here, for the 1, 2, 3, 4, 5 impulse that takes us actually to our 0.5, and our 0.5, as mentioned, no, not this one, oops, undo, not this one either, not this one, not this one, that one. So our 0.5 actually should be up here, so should finish our wave number 3 in the 1000 area, so 1269 would be the projected area that Jeffrey Kennedy had, and our projected area should be similar. Now I still have a wave basis subscription for a couple of days, so we'll cancel it on the 20th, so we can also go in there and see what they plot. Pete, hi, or I already said hi, I'm not sure, but just bought more GameStop, volumes going up. I actually bought a little bit more on Friday by accident. I already set the pending buy order on, but on the profit, so like only for $100 or so. On my Popular Investors account, I actually had that pending order already ready. And on Friday, I was surprised when it told me that I bought more, but then I figured, okay, why not? So if we label the same here, or basically, all we need to label is the bigger impulse, and the bigger impulse was, okay, we need, hourly might not work, or should work actually, but we need logarithmic scales, that's the difference. Okay, hourly, okay, we're gonna have to go to daily here to do that here. So basically the way we have it was like 1, and then that would be 2 if I got it right. And this here would be 3, and then our orthodox 0.4 is actually here, so it's actually this one. And with that, very disappointed here with that predicted price area. Doesn't add up with what Jeffrey Kennedy predicts, and would barely exceed our wave 5, and also in, wait. 3 down to 116, yeah, so it's labeled right, but the areas don't add up. So we'll have to consult the book here as well to check what's the ratio that we should expect here. One thing that we can definitely do is, might be tricky, but let's check. If we add a trend channel, since we have our 0.3, we could technically take 0.2 with our 0.4 with a parallel through 0.3 and extend that, and then basically our 0.5, wherever it is in terms of price, I'm gonna need to zoom out here to move that 0.5 somewhere reasonably. So our 0.5, which also is our 0.3, and let's go back to daily, should be at the top of that area. Now, if we take the price level prediction from Jeffrey Kennedy, then it technically, so based on the trend channel that we can build and the expectation, oh, I picked the wrong 0.4, sorry. Sorry, my mistake here. Yeah, so that's not our 0.4, so we need a new trend channel here. So wave 2, wave 4, parallel through 0.3. And again, so if we stick with the price prediction from Jeffrey Kennedy, which was 1,250 roughly, we're going to look up the ratios in the book, or we're going to try to find them there. Then technically we would be there by July 4th, if there's no squeeze before that, yeah. We hit 150, does my chart again not update? Again, one of the benefits of cheap brokers and all that stuff and wave basis. So here it says 152, and let's check an hourly chart. Boring, it's already logarithmic, auto, and a 1 minute chart. Okay, 1 minute is a little an overkill, 5 minutes, 15 minutes. Yeah, so, and let's just zoom in. We're also gonna go closer up. So basically up, wouldn't move that one, but we would move our wave 4. Still have to then, I mean, figure out this pattern at some point. Again, a little breakout through that, and a little is obviously relative, but it's not such a big breakout from 164, going a little bit below before we go up. But yeah, obviously still annoying. So, but that would move our trend channel here a little bit. And if we then look back on the daily time frame, it doesn't influence the rest, to be honest. But based on that, expecting that the price moves like in a within that trend channel, then the first option to hit the 1,250 would actually be on July 4th. Yeah. Blah blah blah. Hey, sorry, just tuned in, and I'll see the beginning of the stream in a few too, but if you can just explain the triangle. I thought it got invalidated when wave E passed wave A. Yeah, we'll do that in a second. What is your current highest prediction? I don't have a current highest prediction like for that. Like, I'm still standing with what I said before, that personally beyond 10,000, definitely. So 10,000 is just a step along the way. But first we'll need to... Actually, that's not this wave 3. Or 1 second. Oh no, that's this wave 3. Yeah, first we need to come back here. We need to actually finish this wave 3, so we get a prediction for wave 4 and then a prediction for wave 5 to really have an accurate value. And it's been really challenging. Xander, not sure if you've been here recently, but to figure out this pattern here, because if we look at a screenshot from Friday, should be this one. Yeah, no, not this one. April 9th. Yeah, so you see that we had wave 3 to the earnings low and assumed that this is wave 4 because this here is a perfect zigzag pattern, and thought that we are already in wave 1, 2 of the lower degree, where we have this warning here because a triangle is, according to the book, never in a wave 2 position, according to motive wave, very rarely. Yeah. And over the weekend I reread some things, and so basically the thing that makes sense here is this. Now the only exception here is that our wave E here breaks through the bottom of our triangle. However, if we look at here, that's just one of a few real-life examples or historical examples you see from 1975, 1980, where we also see barrier triangles where wave E breaks through the line before it actually continues in the direction it should go. And it's actually really the exact same case that we have here in many, many aspects. So here it's a wave 3 or a wave 4, the entire correction, and it has like an ABC zigzag, another zigzag, and then the triangle. In our case we have, or it's actually an ABC flat here because it moves more sideways, in our case, that seems to be ABC more flat, and that's a zigzag. Yeah, in our case, we have a zigzag and another zigzag, or one of those could be considered a flat, depending how you look at it, and then our triangle. So it's like the same situation. It's also a wave 4. And the only difference that we have, like here you have the barrier on top, not only for the triangle, but actually since the point wave 3, so it's like literally a barrier on top. For us, that triangle has the barrier at the bottom, but it could be that it's not a perfect barrier triangle. So, and in that case, more or less coincidence that those 2 points here are roughly at the same height. But yeah, there is another, no, the 1K wave is basically from Jeffrey Kennedy, like this prediction here, but it's only going till, that one is mislabeled, by the way. 3, 4, 5, or maybe not mislabeled, yeah. Wait. Ah, okay, so yeah, I missed that looking at it the first time, yeah. But basically, depending on this, the assumption is that, oops, 5, 1, 2, 3, 4, 5. 3, 4, 5. 3, 4, 5. But basically this is wave 3 would be around 1250, and then you would have wave 4 of that purple or pink or whatever it is, and then wave 5. So it also doesn't consider how high wave 5 goes here. It's just about like more or less like just about the next wave, which would already take us beyond 1000. Jeffrey Kennedy is the guy that runs the Traders Classroom. When you click on educational and live classes or subscriptions, and their Traders Classroom at Elliott Wave International. So he's also, I learned about him and also around the time when I found the Elliott Wave book, and it was like at a time where he predicted that Tesla will go beyond $2,000 per share, and where it seemed like, yeah, where we were still around $900 per share, or 800 or something like that, if I remember it. Yeah, so quite good with Elliott Wave theory. Now, anyway, back to this. So another aspect here is that the length of this line in terms of duration matches the length of the top line here, the length of the bottom line here. And again, you see that there's also a breakout before we go up. And this 1, 2, 3, 4, 5 could also be labeled A, B, C, D, E as a triangle, yeah, which obviously makes more sense. Although those are old pictures, I think from I don't know, like, yeah, I don't know who drew that, but that's obviously old stuff. And so those lengths match up. And as I showed earlier in the stream, like just as a small repetition, if we look at our corrective pattern here and we take that's 3 days, I'm gonna remove it, and that here might, yeah, also 3 days, and then that here is 2 days, and surprise, surprise, that here, so to point E, but through point D, so not directly, but through point D, so roughly like this, is also 2 days. So it's, while it's not visually exactly the same diamond shape that we see here in terms of the constellation, it's also pretty much the same, yeah. And we also see here, yeah, that's before actually. There's actually the small graphic as well that shows the ABC in terms of A, B, C. And that basically just shows the triangle and also shows it with a line at the bottom and then a breakout to the top, which is exactly what we have here. We could theoretically, as mentioned, put a line here. So like this case here, and which is what was confusing me a little bit, because here obviously it's for bear markets, and it shows like that we then have a breakout to the bottom, blah blah blah. Although it just threw me off a little, but I looked into it, I found enough examples, and the really best example really was, wherever I have it now, that one here, which almost perfectly fits our pattern. And like, so earlier in the stream, again, like I also showed exactly how those zigzags work out like perfectly, and also the Fibonacci ratios between each of the triangle sections, where only our wave E doesn't fit perfectly. But there, honestly, I'm not 100% sure if I have to label wave E here at this point, or if I could put wave E here, and I don't know how to do that then, like, yeah. So, but I think like the proper labeling is obviously, or the most obvious proper labeling is to have this wave E, because here we also see that 0.5 isn't put on the line, but actually honors the breakout from the line. And yeah, like, so based on that, I'd actually expect it to go up today, because I don't know where the price can go within the day, other than it could move sideways, so we could have no rise at all. So it would just a little bit up, a little bit down, a little bit up. But yeah, like, it's the only option that I would see, like that it maybe moves sideways. And could go, like, now looking at this, yeah, because we had our old 0.4 here, and that would be the unorthodox 0.4. So looking at this, technically, oops, not this one, but technically we could make our trend line through this point here, and that would suggest there may be a little bit more room down, so like 140, a little bit above it, yeah. But I'm not sure, because overall it makes more sense to have it through our actual 0.4. And yeah, like, our triangle already breaks out a little bit to the bottom, like it does in this example, and there are a few others. And why does it not update here? Like, ugh. But it's cool, yeah, it's down to 140, and I said maybe it goes down to 140, yeah. Although I didn't see that it goes down to 140. Now the question is, why do you not update? God, I hate this. What's that button do? Oh, replay mode, don't need replay mode. How do I force it to refresh? Clear local data, there we go. Yeah, great. Oh, now it has the low of 140, and we're still at 142, yeah? So why do you not update here? Like, seriously. GME, do we have another source here? No, it's like the only GameStop source that we have. Huh. Why do you not update? How can I force you to update? Connections, everything is from bar chart. Data, blah, blah, blah. Huh. Let's try it again, clear local data. Now we get a new candle, which still would show us at 158 for some reason. 15-minute chart. No, actually it shows us the low. I don't know why this doesn't update here, so the ticker data, but basically a low 142.35, but we were already lower. Or not like low. Huh? Oh, wrong candle. 140.63. Somewhere we had the order book thing, yeah, so like here. Market permission denied, yeah. So like, seriously. God. No data available. Like, seriously, what are you doing to me? How can I check connections? Like, oh, okay, when I double click it disconnects. Okay, so, and now I reconnected and now it updated. The question is, will it keep updating? And for that we could technically open, it was not the order book, or was it? No, not this one. So interesting, the moment I do that, but now it's updating. Now we have blinking things here, yeah, so, or we had for a second. Yeah, have you unplugged it and plugged it back in? Yeah, if it were that easy. I mean, we can try to restart it again, but yeah, I hope my funds at Interactive Brokers clear soon, so that I can use that connection instead of bar chart. Yeah, like no movement. So, and if I click somewhere, also no movement. If I disconnect again and connect again, then we get, apparently, do we get some update? 144, 143, no, doesn't really match nicely. 143, 81, 143, 40. Yeah, let's try restarting. Much fun, so wow. I'm also going to disable the other connections for now, so yeah, click too fast, never mind, connect. And although I can still select for the crypto stuff, select work offline. But I do have, like, I still have my active bar chart subscription, so I'm not sure, and it's updating here, so yeah, well, let's see how long it keeps updating. Now it's blinking, that's what we want to see. And yeah, so technically, I mean, on 15 minutes, this obviously looks dramatic, but if we look on an hourly chart, which would be boring for the stream, it's not as bad. So the big question is, how would we label this pattern here? It's obviously not really an A, B. Could it be? No, could not. So if we say here, that would be wave A, then technically wave C would only take us till here, which would match up with the ideal endpoint of the triangle, and that would be here, because then we would have a nice A, B, C pattern. Not fully perfect, but still nice enough. And yeah, and then likely this wave here is a more complex pattern, but yeah. So on Friday I thought the triangle got invalidated, so I plotted, okay, I'm gonna like just need to connect to the other screen so I can copy the link. And is everything dropping today? Like, just checked my portfolio, I'm down 1.7% today, so. Copy this, go back. Up. And so we have this here. I think, I don't know what point you have here. Yeah, true, Finviz heat map also, but usually I just check my own watch list, although I haven't updated too much to see my positions, yeah, like, but there, yeah, most of them are GameStop, Lemonade, Palantir, Tilray, or I sold Tilray because I checked my analysis and expected a bigger drop and gonna re-enter lower. So seems like that was a smart move to do. But yeah, anyway, so I don't think that holds up at all, because you are like, even in a, so you would have 0, 1, 2, but wave 2 always is a corrective pattern, and then that would be your wave C of a zigzag, and wave C of a zigzag should be an impulse or an ending diagonal, and an ending diagonal, and it would be an ending diagonal in, so the ending diagonal in 18% of cases, so frequent enough. And where do we have diagonals? Yeah. If this is an ending diagonal, then wave 1, 2, 3, 4, 5. So all the waves here need to subdivide into zigzags. So this would need to be an A, B, C zigzag. This would need to be an A, B, C zigzag. This would need to be an A, B, C zigzag. This would need to be a zigzag, and that would also need to be a zigzag. Yeah, I mean that A, B, C. And I think that's one of the issues that we might have, or one of the mistakes that we might have made in the past, and that I definitely made in the past, that we didn't pay too close attention to the shape. And because if you look at this, yeah, so I'm gonna try to roughly draw on this. And then your wave A would be like this, but your wave C is not even remotely similar to it. So like, whereas if we look at this here, and we take this here as wave A, and you see, and I can put it here from wave B, and it almost matches perfectly. Yeah. Then if we zoom in a little bit, and we go here, on this chart, it's not nicely matched with the points, but it should be, I think it was this point here is for wave A, and then wave B is basically from here, while it in terms of time doesn't fully hold up, yeah, but in terms of price movement, wave A and wave C are almost identical again. So again, we see that it hits the perfect spots, and yeah, like so. And I think if we were to assume that this here is a zigzag, I don't know where it would go, like likely like this, so that would be wave A. It's tricky on this time frame, so I'm gonna switch. Let's see. It's a little too close and the points don't match up anymore. But yeah, I mean that would not be a perfect zigzag, okay. That here, however, should be a perfect zigzag. Yeah, so you already see it with the naked eye that those lines are quite similar. So that if I draw a line from here to here and I just move it to here, that it's not fully perfect, but still nicer. So I think that labeling here, in terms of the look of it, yeah, just fits so much better, yeah. And I think the main issue that we had was that we have a really nice zigzag here, like zooming out a little bit, so that we had a nice zigzag here from the high at 300 something down to the earnings low, and on the daily chart it doesn't look that nice, but or even here it would look nice actually, yeah, 1, 2, 3 or ABC. And I think that was our undoing, because we had such a nice zigzag. We know that wave 4 usually, or in 70% of cases, is also either a flat or a zigzag, and so we expected that wave 4 is already over. Then often when you have an ABC pattern, you can also label it, especially if you have enough candles, as a 1, 2, 3, 4, 5, yeah, which is what we did here on the way up. So instead of considering that this could be a zigzag and the correction is not over, we thought about, okay, it actually is over, and looked for an impulse. And by finding that impulse, although that impulse also didn't look perfect, if I remember right, but yeah, whatever, we basically were forced or wanted to have this a wave 2, and because wave 2 shouldn't be a triangle, so we tried it with like a million different things and so on. So I think we just were there like victims of not paying or wanting to see the end of it when it should have been clear already a little bit sooner that we are not at the end yet. Yeah. And yeah, like so. That's really why I think that this one is the pattern that we have to go with. Although the breakout here that gets like that wave E breakout here to the bottom is something that breaks the pattern. But in terms of that, like, and that's what I showed earlier. If we take a Fibonacci retracement from here to here, and if I remember it right, it was comparing these waves, and we look at wave C. So I put this at the end of wave C. Oh, now I'm comparing again the wrong waves. Yeah, so I have it somewhere open here, if I'm not mistaken, or if I already closed it. There. So wave A should be to point B and C. Yeah, so if we have again this Fibonacci retracement from here, then it should be point B and C. So that is B, and while it's not perfect, so as you see here, it should be 61.8, but that's obviously roughly. It's not always perfect, and we are below 78, so we are around 70 roughly, I would say. Yeah, so in that area, and then quite close to how it should be in terms of Fibonacci relationship. And then point B, or wave A, B, C, okay, and then the wave from A to B should be the 6.18 for C to D. Yeah, so if we take that as well, so A to B, and should be for C to D 6.18. So, and if we look here, 6.18 would be this one, and you see that the low is actually only slightly different, or the high here is only slightly different. So it literally almost perfectly fits. The only exception for us is the last one here, where obviously our wave E makes the exception, and yeah, like turns out like this. Yeah, like, but still, even with that wave E, because we have, and again, like there are more, I found just briefly skimming through the end of the book, like I spent 5 or 10 minutes looking for it. I found 3 different examples where we have a diagonal where wave E breaks out in the book. And so if they are confident with printing those examples in the book, although they are clearly violating rules because point E breaks out, then I'll have to assume that it's okay that that happens, that the last wave of the triangle can violate that rule to some extent. And so, and it's the only thing that makes sense, because the moment, so mostly because it also follows the Fibonacci relationships of those wave pattern, or of those, yeah, like between the relationship from here to, you know, from here to here, or stuff like that, yeah, that we just did. And a triangle should always be the last corrective pattern. There can be no corrective pattern after it. If there would be now a zigzag or something, then this couldn't be a triangle. But if that's not a triangle, then I have no idea what it should be. Yeah, and yeah, overall, and also like there are no quadruple corrections. So the biggest corrective pattern would actually be a triple 3, which is what we have with our first. I would call it a, I don't know, like zigzag. Yeah. Although, yeah, I mean, it's not a flat correction because obviously point C retraces properly, and that's also not a flat. So we basically would have 2 zigzags followed by a triangle, and not 100% sure if that's possible. Yeah, so that was in, where did I see that? I read that also. Oh, that wasn't the part about Fibonacci. There was a table that explains how all the corrective patterns also follow Fibonacci in terms of the numbers. So this table here should be visible now roughly. And our second corrective pattern would need to be classified as a flat. I'm not sure if we can do that, but technically triple corrective patterns, there's flat, flat, triangle, flat, 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 zigzag, flat, triangle, and zigzag, flat, flat. Yeah, and yeah, like this is too much of a triangle to try to label this as a flat, and this is clearly a big zigzag, and that maybe because of the shortness of the movement could be considered a flat. I don't know, but what I know is like that it's the one thing left that makes sense to me, and where like whatever we measure, so the length of this wave A with C is almost identical, the zigzag up here is almost identical, the triangle has like the right shape, prices are still updating, yeah, so we're still having movement here, yeah, so it's really the only thing that's left for me that makes sense. If that doesn't, or if that's not the right pattern, then yeah, then we're at a point where I honestly have no clue what is. Where was the wave 3 of this, or point of this one? Shouldn't it be up here? So where's the point of the, oops, yeah, never mind. Let's get rid of that and label it new. Hourly is not enough, so daily. No. If I zoom out, it might be, yep. So channel, 0.2, 0.4, 0.3, and extend, yeah. So, but yeah, so based on that, actually, if there's no squeeze, because obviously a squeeze moves things faster, and would lead to a so-called throw over, so where the fifth wave shoots over the trend line, yeah. So if there is no squeeze, then technically it would be 4th of July, which kind of like is fitting for US citizens, yeah. So on the 4th of July, GameStop shoots up to 1,000 and declares freedom or independence, yeah. And but obviously, if there are people or hedge funds getting margin called, then it would happen sooner, yeah. And also, obviously, the time restraints are not as important as the price level. So while it might appear that the 4th of July is the day where it works out the best, could be earlier, could be later, could be we mislabeled everything. So much fun always with the labeling. And yeah, so if I move in here, let's say 2 days. And yeah, so basically, I don't know, like we are back again at wait and see how this develops. I don't think that it can go much further. However, I think it's also nicer now because this low is now also within the trend channel. Yeah, so our unorthodox. Well, how would we know? Like if the price drops further, then basically the next big point of invalidation would actually be this wave 4 here. No, not this wave 4. Wait. The next big point of invalidation. It's actually a good question. How would we know that? Like if the price falls further, I mean, obviously, but the question is like at which price point would it invalidate? Because technically we're overall in the wave 3, so this has to be an impulse. So technically from the biggest wave pattern here, so from the 3-4, at this point with this labeling, it would only get invalidated if we touch, like really invalidated, if we touch this point here, which was at like $6, yeah, which obviously is not a great way to measure it. Now what else do we have that could get invalidated? We had our wave 3 finished here, making this our wave 4. By changing our labeling, so initially, if you remember, we had our wave, where is it? This one should be it, yeah? No, that's from the weekend. So originally our wave 4 was here, so at the earnings low, and back then the assumption was, or the labeling is, if we fall below 116.9, it would invalidate that wave 4 and would have then invalidated everything we labeled from the earnings low, yeah? And now with the current labeling, I don't see actually any reasonable way how that can be invalidated. Of course, if the price falls, at some point we have to accept that this is not a triangle, although I don't know what else it could be by now. Like, if we would have a sharp drop, I don't see any pattern here that would match then in that case, yeah. Like a triangle with the actual hopeful or rightful endpoint here. So if we move that, so like kind of like this would be the perfect undo line. So this here would be the perfect triangle, and I don't know what else fits, yeah. And the breakout of the triangle at the bottom is something that, while I was unhappy with it initially, by finding enough examples in the Elliott Wave Principle book, it's something I learned to accept. So, but how would we invalidate that? At some point, if we fall further, we would have to admit that that breakout isn't something that we can tolerate. And likely still if we fall below 116.19, because as we know from the book for double free corrections, that usually the extra correction is not because of lack of movement. So the first corrective pattern in a double free usually already achieves the proper price retracement, which we had here from more than proper, from 350 to 116, yeah. And the additional patterns, so the zigzag and the triangle, are more about prolonging the correction, so more about time. And so if we would fall below that point, 116.19, that would be a definite sign that whatever we have labeled here still doesn't make sense. Then technically, now that's the big question here, yeah. If we label this here, so if we take that one and copy it, and where does that leave us, or where would that leave us? Yeah. That would then be the next possible pattern that I would see. And then we would have to kind of like try to make this here a leading diagonal or an impulse. And this here would need to be a zigzag, which it is. And this here would then also need to be another 1, 2, 3, 4, 5. Although I don't think that that will be the case, because we know by now that we have to pay way more attention to the look of the chart, so that the patterns actually look the right way, yeah. So that we don't have an A, B, and then like only a short C, but that in most cases the look will already also tell us if we got it right or wrong. And if this were a big A, B, C, then the look definitely doesn't match, because we would basically right now or within the next hours see a drop to 72 or in that area, because we don't have even remotely the retracement that we would need. So, but that's the only other option that I then see here, like, and not that I'm happy with it, because that would be the bigger movement. A, B, and then C would need to take us in that area, maybe a little bit more, maybe a little lower, and which would still be okay if it would happen, because that would basically be one of the alternative labelings that Jeffrey Kennedy had. So this one here, first we go down to 60 and then we go up. Although here, that's the interesting difference. you see here it's labeled in pink 1, 2, 3, and in blue 1, 2, 3, 4, and here he basically assumes that this is already the end of wave 3, 4, and 5. So basically the overall, or with this pattern, we would overall not go as high tech or theoretically, yeah? Or maybe, yeah, but in any case, like no matter which way it plays out, like always point, or always point towards above $1,000 per share. And if that doesn't squeeze hedge funds, then I think nothing will. So yeah. But I think it's an interesting question to talk about, like what would invalidate it. And at this point, technically an invalidation would happen if the price of wave 4 reaches the top of wave 1, which was at $6. So that's that. But if that happened, I think already we know earlier that it kind of like doesn't add up anymore. So since there's no specific rule in terms of how much wave E can break out here, yeah, from the triangle pattern, but I think there's too much that matches here to invalidate this. Like literally, like we basically had a breakout of that triangle pattern that makes it the last wave a little bit not so perfect, but it puts it perfectly in the trend channel with the unorthodox wave 4. So with the point that we had as wave 4 before, and it is still lower. And yeah, like so, yeah, like I honestly, that's probably my best work with Elliott wave theory so far, like labeling this stupid corrective pattern and confirming every aspect of it. And even with that drop to 140, considering that our overall trend channel fits perfectly, so from our wave 2 through our wave 4, and also the rest is enclosed. Yes, here we had the dip a little lower after the wave 3, but yeah, we know there were the buying restrictions and so on, and that's not the same, that's a subwave, so not really relevant for this trend channel so much, yeah. And yeah, like I honestly don't see anything else happening, but from here we go up, yeah, like. So I'm gonna check comments. So how do we know if this is invalidated? Would it be at 116? So yeah, technically, as mentioned, so as 116, it would already become clear. If we go below 116, or even actually when we start to get close to 116, it already invalidates the point that in a double free, usually the additional corrections are not to cover more price area, but are more about sideways movements for like time. So yeah, and anyone concerned, yeah, like we have a website for that, yeah, like maximum pain. Somebody shared this, I guess you shared it with us, not sure anymore. But maximum pain 145 was the number, yeah, which, yeah, I mean, that's why they try to push it below, but it should only be relevant on Friday or not. So like, why try it on Monday already to push it below? But again, like, I mean, we can even if we take regular approaches, support and resistance level, like even on that small time frame, we can see here in the same area that the price had a hard time breaking through. We can see on the downward side that here a couple of candles before it broke below. And if we go back here, yeah, it was like 140. Then we see here that it had a tough time to penetrate the price. So even if we use something common outside of Elliott wave theory, then we also, that's 140. So we see that that candle pierced 140, but then bounced. And then we see again 140. Here the same thing, that candle didn't penetrate. So those two before it finally broke through. Then on the way down, we see that it 140, okay. yeah, okay, on the way down it went through nicely, but then it kind of like bounced up, but bounced again. So even if we use support and resistance, it adds up nicely. When we use trend channels, it adds up nicely that this is the low from where we turn around. And the only, like from all those patterns, and it's not only one pattern that we're looking at a double three with a zigzag, another flat or zigzag, and a triangle. And out of those three patterns, there's only one wave that doesn't look literally like in the book, and that's this wave E here. And even for that, we can actually find literally in the book the examples that, yeah, like also show that that's okay. So, and yeah, anyway, so maximum pain, total options 569,750 out of the money. This is not bad, just be patient, boys. Short selling restrictions again, not that it matters much, but it's a thing, yeah. So for today or for tomorrow? I'm not sure if they go in effect today or only tomorrow, yeah. So every time you have a drop of, what is it, 10% or so? Or more, like there's a certain percentage where the stock then gets put on the short selling or restricted short selling, which means technically you cannot short the stock, or you can only do it after an uptick. So you cannot endlessly short the stock. However, there are for sure ways around that. But yeah, so, and drop to 70 or so seems unlikely. Yeah, especially because if we again consider that we should pay more attention to the shape of patterns, so that there's actually some symmetry to it, yeah, that they look a little bit more like in the book and not like if I would have drawn them with crayons, yeah, then it's even impossible, because we would need that drop literally to happen today. Don't think that's happened. It could drop for like a split second. Yes, it could, but then our pattern would not be fulfilled, because that third wave of the zigzag, yeah. So if it technically drops to 70 just for half a second or for one share, you would still need to be able to fit an impulse or an ending diagonal in there from that high to that low, which would technically be impossible, because in that impulse, wave 3 can never be the shortest wave and is usually the strongest. And however, if we would have one candle with a short spike, that would definitely be a wave 3 and not a wave 5. So yeah, like don't see that happening. Like, I mean, everything is possible, but based on Elliott wave theory and our labeling, it's like highly improbable. So let's not say impossible, but based on our labeling, it's highly improbable that it will happen, because this is literally the labeling that is like, it's one of the most complex and rarest corrective patterns, and everything fits, or 99% of it fit like they are out of the book. And but definitely not organically. So this is tough. I've been following every day. Must say your skills are improving and helping us all out. I'm happy your correctives are getting better. 10 out of 10, yeah. Solid 5 out of 7. Yeah, thanks for the feedback. I enjoy it. I mean, I partially honestly feel stupid about some of the things that I said or labeled in the earlier streams, because I simply forgot about things. I skipped parts of the books, especially later parts, because I figured, okay, they are not about the patterns anymore, so it couldn't be that important. Boy, was I wrong, yeah. And didn't pay attention to a few words like orthodox low and unorthodox, yeah, like, which allows us that our point 4 is not the lowest point, but is the point here, and so on. So yeah, so it's been like a real great journey for me so far as well. I still suck at corrective patterns, but I think this is probably the best work I've done so far. So, and I don't know, like if that drops a little below the trend line here, okay, then I also, so slightly below 140 I would still accept, yeah. But I think at 135 or so roughly there, I would say, okay, screw this. It's the 12th, like, yeah, like the, I don't know how many time that I come up with a pattern and the chart says no. And yeah, I believe one of the outcomes of Kennedy's charting was if 116 got invalidated, we could see a drop to the 90s. Yeah, but the problem with that is that for that count, the assumption was that that this is wave 4. although it's the smaller wave 4 here, yeah? So it's the blue, and currently, wait, I think I might have mislabeled something here when we opened that new chart. So 1, 2, 3, 4, 5. I actually mislabeled something here. I missed that part here that he also labeled a red one. Yeah, so not that it matters for us, but basically, and I need to recheck. That's 3. Yeah, so basically this here is actually, so I need to move that one here, and now it becomes tricky. Yeah, so basically we're still in this wave 3. Yeah, bad idea, back you go. So we're still in, that would be 3. That would then be wave 4, and which means we haven't finished that wave 4 yet. And up E and Y. And wait, what? Okay, I need to put the image on the other screen so I can actually follow that logic here. What am I missing here? I have that blue labeling. You guys cannot see my second screen right now, so it's like I'm talking to myself. And then there's red labeling, so there's another wave in there that's here, 1, 2, 3, 4, 5, which means this 4 is wrong and that 5 is wrong, and this here would be wave 3, which means the bigger wave 3 is not finished yet. Oops, wrong wave 3, so this wave 3 is not finished yet, so that goes here, which would make this our wave 4, so yeah, much fun, so wow. So that, yeah, whatever. Thank you. Again, so in small, that would be the pink one. 1, 2, wait, what? And that's the blue one. So in blue, we have this 4, which then becomes this wave 3, and which eventually would become blah, 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 and blah, blah, blah. So, which actually means that would be the one that we would have on the, what was it, roughly 4th of July, we put that here, yeah, so just as an estimate, not as a final thing, and which means my trend channel here is wrong, that's the wrong trend channel, and I need to quickly relabel that corrective part here on the hourly chart. So first of all, yeah, like move those things to the right candles, low 140, low 140.39. Okay, so up, and quickly tools, Elliott wave. So first we need a combination which goes from here to here. Oops, yeah, not like this, but like that. Then we need a zigzag which goes from here to here, and another zigzag that goes from here to here, and a triangle that we need from the menu, tools, Elliott wave, triangle that we have here. Yep, almost perfect. So now the colors also match, and now I'm going to zoom out to check if that now makes sense. So we would have the bigger one where we are in wave 3, and the smaller one which goes 1, 2, 3, 4, 5, which means there's another 1, 2, 3, 4, 5, which completes this wave 3, which basically is this labeling here based on Jeffrey Kennedy. Yeah, so basically had one of the bigger waves here wrong, which means as a result, technically, if this is our point 2 and our point 4, then our channel for wave 5 would look like this, and which then moves, yeah, like we said, 1,250 was his price target. So again, dates don't really matter, but technically things could go like ignore wave 4 and 5 here. Yeah, we don't know their targets at all before we get here. But technically, that's how it could go if it's organically without a squeeze, blah, 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 blah. Okay, so we have that fixed. Yeah, so and I'm gonna quickly take a screenshot of that. So, and also on the hourly chart. So, up. And yeah. And so yeah, I believe one of the outcomes of Kennedy's charting was if 160 got invalidated. And the other problem, however, is, that's what I wanted to say, or maybe I already said it, like getting confused. He said 116 because he still has wave 3 and 4 here, and he looks at a chart where one candle is 2 days, yeah? So obviously he doesn't recognize any pattern here, yeah? Whereas we are looking closer, and we also had wave 3 and wave 4 here until Friday or even on Friday, and then on the weekend I looked at it and actually figured out, or not sure if I figured it out, yeah, but it's like what makes more sense, that this is a triple free correction, so one of the rare ones, and our wave 4 is here, yeah, and therefore the point here, if we fall lower, is not the same anymore in terms of invalidating it. So for him, on this scale here, yes, if we reach 116, then it would invalidate this wave 4 and force him to relabel. Yeah, but for us here, our wave 4 already moved. Now we have that. Yeah, blah blah blah. And so could we potentially be seeing that starting now? The drop to the invalidation, I don't think so. Like, it just seemed, it's like I don't see any way to label this any better. Like, compared, like literally every aspect of this labeling, with the only exception, so from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, out of 11 waves that are in there, only wave E isn't perfect like in the book. Like all the other waves in terms of price movement and duration are, and also in terms of the triangle of the length relationships between each wave, are literally like in the book. Yeah, so yeah, is my chart not updating anymore again, or 139.56, and what does it tell me? Okay, it's still updating, yeah. So while I technically consider it possible that we go a little lower here, so, but I don't think 116.9 is possible here. So like there is a point where this whole pattern simply doesn't look nice anymore, and that's the point where we have to call it invalid. Yeah? Like for now, I still think, looking at the example from the book that I constantly can't find, where did I put it? Did I close that page of the book? No, it was not here either. Here, so looking at this example, although this looks like it goes downwards, but again, it's the same as here, just printed differently. Yeah, so kind of like here, it considers inflation differently with the constant dollar. But that's literally the exact same situation that then follows with the breakout to the top. And again, it's also with the with a violation of that wave E here, that it goes a little lower. Yeah. If we look very close, we can also see that here wave E is labeled as an ABC zigzag. That again looks, if we gonna open that in a new tab, and here, yeah. And if we again look, I think from the look of it, so if we label this and then we label wave B to C roughly, yeah, while it's not perfect, there is still like quite similarity in the movement. Maybe my point C here is too high, yeah. So, and I think we need to pay closer attention to the look, yeah. So Dead Actron, welcome to the stream. Yeah, like not much happened. Like actually, we had on Friday. Where do we have it? Friday. I think that was that was not Friday. So that was our labeling on Friday. That actually should have already given us some pause, considering that triangles, according to motive wave, are very rare in wave 2, And I don't know how I could forget it, to be honest, because I'm constantly saying wave 2 is always a corrective pattern, but not a triangle, which should have already told us that while this might be a triangle, as a result, this is not a wave 2, and which forced me then on the weekend, basically on, where do I have it on? No, not here. 2 days ago, basically on Saturday, I came up with the new labeling, so that this is a triple free, yeah, and we're currently in the triangle pattern of that, which is a nice thing because a triangle is always the last corrective pattern before the final motive wave, which means it's always in the wave 4 and it's always the last corrective pattern in that corrective wave before we go up. Yeah? The only thing that's like not perfect, like the perfect end of the triangle would have been here at this point, and that small breakout to the bottom here is like, while it's annoying, it's by far not really relevant, yeah, because it's like the same like here, and if you go through the book, you find at least 3-4 other examples where where a triangle basically violates the last rule, or the last wave violates the rules a little bit. I don't know then why it's a rule, to be honest, yeah, that wave E doesn't go beyond the line from A and C when there are more than enough examples in the book itself where it does it. But yeah, so that's where we stand, yeah. Don't be too tough on yourself. We're always our harshest critics. Yeah, I mean, I don't know. I mean, obviously, like for me personally, it doesn't matter that much. Yeah, so I'm happy. I'm more positive and happy that I learned, so that I kind of like finally got it in my head that the shape of the patterns is very relevant, that it's not just about the price movements and if we hit the right price area, but that the shape also needs to match, like we have here, the length of this, and so on. So, and yeah, so for me, it's more about, I see that as a positive progress, obviously, and I'm happy about it, but I'm also aware that by sharing wrong information, although it doesn't make a difference in the bigger scale, or on the, if we zoom out a little, just on the daily chart, it doesn't really matter that much, like, because here all that labeling becomes irrelevant. It's simply, okay, even if we would label wave 4 here, it would just give us a slightly higher price target for the end of this move here. But if we end up at, and so basically, and that's the funny thing, actually we can do that, yeah. So if we take point 2 and assume our old wave 4 parallel, oh, not line, sorry, channel. So we take wave 2, our old wave, or point 4, which is the unorthodox point 4. Then we also see that basically if we could have a relationship in terms of the length of a wave or something like that, yeah, then we have our price target again around 1,500, which is the price target we had in wave basis, yeah, roughly. Whereas if we consider our new wave 4, that is a longer triple free corrective pattern, then we get the same price target more or less that that Jeffrey Kennedy had. Now, another thing we could do, again, so apparently something, again, that I refused to accept for a very long time, but apparently the look and feel of waves is very important. Yeah. So, and in an impulse, two waves tend to be very similar. So technically it could be that our wave 5 develops like this. Again, if we reach a certain price level and it forces a margin call, then the movement would obviously be different. Or, so this is wave blah, blah, blah. So it could be similar to wave 3 or to wave 1. Although wave 1 is like quite endless, so I don't expect that to happen, yeah. And I'm not sure if I can just move the line from here to here because of the scaling, but yeah, so. But yeah, so what I mean is, like, while I personally don't care that much, if I'm wrong, I'm more happy about that I learned why I'm wrong and learned something new, or kind of like, yeah, it's a little bit a pity for those that maybe watched one stream looked at one pattern and maybe that pattern turned out wrong, and now as a result they don't bother to look into Elliott wave theory further because they assume it's just garbage, yeah, when in fact the mistake was mine. So, and yeah, anyway, so at Doctor on take about 40% off their good point. what 40% of where? Anyway, don't sweat it. Yeah. Anyone know if it's possible to log charts on mobile wave basis? I haven't tried mobile wave basis, so can't say. Hopefully you're right, and this is the end of this mind-bending correction. Yeah, like, I mean, honest, can you come up with anything else? I really, like, from every aspect, from Fibonacci retracement, like literally from every chapter in the book, yeah? So no matter if we look at the similarity of the waves, the Fibonacci retracements and so on, it doesn't get better, in my opinion. So I really don't know what else it could be. But yeah, we will see. First time you all weren't here for the great drop to 40. Yeah, like, yeah, I also joined that drop. Although, like, I have to say on my popular investors account, I took some nice profits. Although, I mean, in percentage, so that's why my January on eToro is plus 55 or 65%. Not necessarily because I wanted to, but because I had to, because my risk score got too high because of the volatility. But yeah, on my other account, I'm pretty much also holding through the lows and the highs. So I believe in Chris, thank you. Then we are immortal apes. Yeah, yeah. All this work on such a small scale really has no impact on the overall targets. Yeah, yeah. I mean, yeah. If we move our wave 4 here, then it changes a little bit. But honestly, if the price target for the next wave 3, yeah, is 1,200 or 1,500, like from starting from here or starting for people that averaged down or even bought at 40 or bought earlier, yeah. Initially, the first position I opened was at 37 or 38. Then if we go to 1,200 or 1,500, it doesn't make a huge difference, like as a stop along the way especially, yeah. And I'm surprised we're at almost 16 million volume. Are we? Daily dip. I see 3.9 million volume today. So I wonder who is selling. Like, let's check in. Maybe my data here is wrong, yeah? So, because we also have a volume indicator here, so 5.9 million, so. God, I really need to get those data sources sorted out. So are we not updating anymore? So is this the issue? 3.9 million, yeah. And I wonder who is selling. It's okay, we are learning along with you, yeah. That's the biggest advantage in my opinion, like for me, maybe for everyone involved, because I do the stream, I'm literally forced to justify my labeling in some way, yeah. And if I'm unable to justify it, then somebody else might come up with better labeling, or I simply have to admit to myself, yes, it's what I want to have, but I cannot justify it, so it's likely not what's true. So I think that there is a huge benefit to doing this on the stream, and yeah. This is an anomaly, rules don't completely apply. I don't know, I like to disagree, like, because while the Elliott wave book states that obviously an index should follow closer to Elliott wave theory because it more represents the mass psychology than a single stock, then GameStop on the other hand is literally mass psychology. Like, that's the one stock, or AMC, if you take those stocks, those are the stocks where literally mass psychology applies. And also, so far, every time I've been wrong, and I don't know, like I've been wrong here, from here to here, like obviously that's a long time period from March 25th till today, because again, first before this is wave 4, and that's 1, 2, 3, 4, 5, so 1, 2, and so on. So I've been wrong mostly here for like, yeah, forever and relabeled often. But overall, we also had enough quite accurate hits of like where the price will go before we started the live streams. So starting with predicting the, what was it, 380 area or 300 area here, predicting the drop down here, and unfortunately not followed with the takeoff because we then had buying restrictions, yeah. Followed by predicting, not sure if I bothered to label that and predicted that top here, but once we had that top, and especially at this point here, we're able to start labeling this as ABC, predicting the low area, although it went further, but so overall I think it still applies. Like, well, yeah, so I think there's a risk to it. The moment we say, well, the stock behaves differently, and I accept, I'm not saying that it never does, but if we accept it as a norm to say, well, GameStop is an anomaly or highly manipulated or something, so rules cannot fully be enforced, we basically make up the excuse for us to label things wrong. Yeah, so like to ignore rules. So I'll rather cry a little bit about how I dislike a certain rule violation than make it the norm to say, well, but the stock is heavily manipulated, or well, but in this stock it's different because it's such a special case or so. So, but you have an argument. Yes, there's some difference or a lot of difference between GameStop and other stocks, but if we accept this as a fact, and then we could also accept that, I don't know, the ABC doesn't have to look nice because blah blah blah, and as a result we would start to ignore more and more rules and likely label things the way we want them to be all the time and turn out to be wrong instead of label them the way how it makes the most sense. Yeah, but yeah. But I'm sure that certain rules at some point we can tolerate if they are broken. But I feel more comfortable, like in this case with this wave E, if we can also find a page in the book where that rule is broken. Yeah, so that I know, okay, it's not just me trying to find an explanation or force my labeling on the chart, but even in the official Elliott wave principle book, there are charts where that rule is at least slightly violated. If now in our case it's a little bit more violated, which currently is not the case in my opinion, then I would still be able to tolerate it. Yeah. So, but don't want to make it our default rule to say if a rule is broken, well, whatever the stock is doesn't follow normal rules. Yeah, it's going to be in the history books. Yeah, if we get it to squeeze. Oh, wait. I'm surprised, but mobile wave basis still has auto charting and a lot of other charting features if you can get around mobile UI. Yeah, I hate like charting on mobile unless you maybe have an iPad Pro or so, where you likely can just also go to the regular web interface. I don't know, like, I mean, other than maybe showing somebody real quick how you would label something, probably not really something that's comfortable to use long term. Yeah. It's going to be in the history books, yes, especially, I mean, especially if we get to margin call hedge funds, but even without that, if we were to move organically to the 1,000 something area, it already is an incredible feat for a stock. So weight volume is 6 million, my cursor was wrong. Yeah, like for me it still now shows 2.4 million, like on the hourly, and on daily 4.2 million. So, and on trading view we're still on daily, yeah, 5.9 million, so 6 million. Yeah, like probably I trust trading view there more. Question is like where that data comes from and why it doesn't add up fully. But yeah, so my cursor was wrong for the day, my bad, no problem. I was looking everywhere and like I don't see that much. What I'm not sure what you're but you were replying to something, so never mind. Okay, so still about the volume. Okay, I've been learning a lot from you and the stream. Really appreciate it. Yeah, great. I like. Happy to hear that. I'm happy to hear that like most of you that are still here are not blaming Elliott wave theory when I make a mistake, but actually admit that it's my human error and yeah, actively try to label themselves to see if something else is possible. So yeah. Mr. Cortex, I think I haven't said welcome to you today, so welcome and thanks for being here. The Elliott Wave Discord channel is amazing. Thank you for taking time to post there. Yeah, so for those of you that don't know, I have a Discord. It's not necessarily the Discord for this YouTube channel, but it's for my other YouTube channel. But in that Discord, and I'm going to share a link then at some point, need to look it up. But in that Discourse, we also have a small investing and trading section where I added a new channel about Elliott Wave Theory. And there you can see that on Friday. Yeah, so that was the 10th, which should be Friday. Saturday. So Saturday I actually shared my new labeling with the triple free pattern and said the stock might go up or the stock might go down. So I gave two possible cases. I think I'm still fairly certain that I will be right with that prediction. And yeah, and then we dug deeper and chatted a little bit, and basically I looked for proof in the book to confirm my thesis, and yeah, so far so good. Let's see what the chart in reality says to us there. And max pain for this week changed. Yeah, we already checked it earlier. It was 145. Like maybe did it change again based on new volume or new not become a Patreon? Like why? I always end up clicking on that button. Oh, so it's still 145. Yeah, and yeah, like I'm not too much into options. Obviously, we had that already before, but it's actually interesting to see in GameStop that pretty much every week it seems that, especially towards Friday, that we often have a fight around the max pain price. What do you think about the OBF being so high yet price dropping? You mean the volume being so high? I don't know if I don't even consider this high volume, I would say. Like if we look at previous parts, so if we zoom out, then we can see that usually during a third wave, we usually have higher volume. Now this year was a third wave of a lower degree, huge volume, and obviously if there wouldn't have been the buying restrictions, things would have gotten different. Then the entire thing here is a third wave, so we have higher volume, especially than here, where we have another climb up. And then during this fourth wave, actually, we see that the volume is going down and down and down, and it should actually pick up right now and eventually turn around here. So I'm sure it's possible it's probable to use the volume indicator as an indicator for price movement. And obviously when you have a lot of volume but the price is falling, the question is like, does that mean more people are selling? Yeah. But I'm just too focused probably on Elliott wave theory to give that a lot of thought. Like, so while I would expect that we see the volume pick up to take us through wave 5, for now I'm literally more focused or more, I don't know, like waiting to see this pattern here finally turn around and confirm the labeling. Yeah, so that after, I don't know, 2 weeks, 2.5 weeks of dealing with that corrective pattern, to finally be able to say, yes, we got it right and move on. Although it's a little sad that we got it right. So if that confirms, so we go up here and have 1, 2, blah, 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 3, 4, 5 that take us up to somewhere there, then it's a little bit sad that you kind of like on the last weekend before it's over was able to label it properly and not at least, I don't know, maybe somewhere here already. Yeah. But yeah, so where were we? Okay, I think we also realized the power of this tool and how it can be applied, like it works. I read that even if there was a stock split, this wouldn't influence a short position. Is this correct? I think if there's a stock split, it goes both ways. So it would be also if you have one short position now, you would have two then, but they would both be for half the price. Therefore, so if you have a split, only one share becomes two shares. So you just have more shorted shares for each half of the price of what you had before. So stock split doesn't change anything, it just changes the chart. So like literally the only thing that changes is how the price is on the axis here. Technically for historical, so like if we look at Apple, I don't have it open here, but it's when you look at Apple at the historical chart, since they had a couple of splits and you go back, you get to points where Apple was worth like 16 cents or so. Not because they were that cheap, but simply because of the split forced the adjustment of the historical data as well. And yeah, so splits are irrelevant. The only thing that would change would be a reverse stock split. So if you have 1 million shares, but you turn them into 5 million shares, which brings a problem of its own, because if you have only one share and your broker doesn't support fractional shares, then you cannot technically hold half a share suddenly, yeah? Or if you have 3 shares and so on. So a reverse stock split is probably like something that has some effect in some way, but a regular stock split shouldn't have any effect at all. And other than it might be considered a positive sign, because usually a company would do that, in my opinion, to reduce the stock price so that the average customer that doesn't have a broker that supports fractional shares is again able to buy it. So Tesla splitting at above $2,000 and make a split to it brings the price back to 300 something, yeah, made sense, because if your broker or if you buy shares at your bank and they don't support fractional shares, you might want to buy Tesla, but you don't have $2,000, or 2,000 is too big, a bigger part of your available money, and so the split makes sense to allow smaller investors that cannot access fractional shares to buy the stock again. Yeah, like I'm sure there are some studies about how much money the average investor has, or like talking about retail investors, and how many of them don't have access to fractional shares and so on. So I'm not sure a split would make sense at around like $200 per share to bring the price down to $100 or $50. But at some point it definitely makes sense, but it shouldn't have any effect, or at least not a negative effect, if at all. In my opinion, a positive effect, because then certain retail investors that cannot buy fractional shares suddenly also get the option to invest in that stock. And if they're short whatever they split multiple is. Yep. So it couldn't ask as a catalyst. So there's no catalyst. Yeah, not a catalyst, but it hurts shorts more when we squeeze. I'm not sure about that, because if you have more shares, it also means, like, obviously technically nothing changes, but think of it like this. If I currently have one long position and I bought at 140, and the price, and my broker doesn't support fractional shares, and the price goes to 200 or 300, 500, and I'm like, I'm not sure if it will go further, like general scenario, not talking about GameStop specifically here, yeah? And so I want to take profit, but I only have one share and I cannot sell half the share, yeah? So I kind of have to sell my entire share. However, if there is a split, suddenly I have 2 shares, I can sell one at whatever 400 and the other one at 600. And the same would be for a short position. If I currently have one share short and I want to cover it, I have to cover the entire share, which creates one share buy order on the market, and or equivalent to actually 2 shares after the split. Whereas after the split, I might have 2 shares, but I could say I'm just going to cover one right now. So in a squeeze, obviously it won't make a huge difference, because they would be forced to buy, yeah, for both of the shares that they have. But outside of a squeeze, it suddenly means that you can close your short positions or cover them in smaller steps. So do I remember correctly that the wave 5 after a complicated correction is usually pretty sharp and fast? Yes, it should be. And that's also what I remember, but what I can't find in the book. But I didn't look for that very long. Yeah, so I remember it from the book that after a triple free, we usually should expect sharp and long fifth wave that might end in a throw over. And a throw over would be the price going outside of the trend line here. Yeah. And if it stays within the trend line, then technically the 1,200 price target that Jeffrey Kennedy came up with could only be possible around May. If our 1-2 here is correct, that's like the big if, or not big if, but the if here. However, if we are right here, and I'm going to look for that part in the book again where it mentions that after the triple free correction, wave 5 usually ends in a throw over, which would mean that we can already reach that 1,200 price target sooner. Yeah, so because it could result in a breakout of that channel. So, and especially if we consider that at some point, especially if there's a squeeze, of course, so if somebody gets margin called, then it would kind of like fit that theory perfectly, because it would be a very steep rise up to whatever area. And so, but yeah, like that's the one thing I yesterday in the evening didn't find in the book anymore, but I remember it as well. But I want to find it as well, so like as a double confirmation. Yeah, so if the price gets to 1,000, wooden hedges get margin called, shooting us way higher instead of a correction. You shouldn't forget that you always have automatic trading halts. So every time the stock, I think it's 10% within 5 minutes or 5% within 5 minutes. You can look it up on the NASDAQ website. There it's somewhere explained. So you can look up the trading halts. And there's somewhere the explanation for it. But basically every time you have a trading halt, so the trading gets halted for a certain period of time. Now what happens is, if you, for example, are trading on eToro where you have a news feed, every time GameStop got halted because it shot up or it dropped down, people were posting on the news feed, eToro, why do you not allow us to trade? This is a scam and so on, because they have no clue what a trading halt is and that it's the normal behavior of the entire market, not of a broker specifically. Yeah. As a result, you have a certain amount of retail investors that still don't know what a trading halt is. And as a result, when the price shoots up and they suddenly see they cannot buy, they cannot sell, they panic. What will they do the moment they can buy again or sell again? They press the sell button. Especially, let's say we have again, if we go to the daily chart, and let's say the price goes in a 1, 2, 3. 3 should be the strongest movement in this wave. Yeah, so like not this big 3, but from this brackets 4 to brackets 5, there needs to be another impulse in there. And so the price shoots up, we have a trading halt maybe at 600. So we have, it's just a random number. Yeah, so I'm not saying we will have one there, but random number 600. It would be a new all-time high. People would be, oh my God, it's so great. Then trading halt happens. Average users that are too lazy or for whatever reason don't do any research and haven't learned anything in the last couple of months panic. Oh my God, there might be buying restrictions again, and they smash the sell button. And even though shorts are forced to buy, yeah, there would suddenly be a certain amount of available shares that would cause a small drop. Yeah, like the drop might not be huge, but it will likely be sufficient to, on a lower time frame, confirm the subwave pattern. Yeah, and then the rally would continue. I think there will be plenty of people that have their take profit, sell limit or whatever at $1,000. Like I think that's a psychological barrier where many people are like, okay, if it reaches that, I'm happy. And so again, the price shoots up and it would literally shoot through $1,000 and would likely be followed by another trading halt. So again, we make a lot of ground in a short period of time because of a squeeze. And combined with the volume of people that were anyway willing to sell at $1,000, you would have another short nick in it, which should be enough to make up our wave 4. Yeah, so. And don't forget that Citadel themselves, for example, already paid fines over and over again for violating trading halts, so for executing orders during a trading halt, for prioritizing their own orders and so on. So they technically can, when the trading halts happen and when then a few people panic sell because they don't know that it's just a trading halt and not the end of the world like buying restrictions, that they can technically just violate the regulations again to like drive the price down a little bit further to make the dip after a trading halt a little bigger to get more people to panic sell, blah, 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 and so on. So I think there's a lot of ways how we could explain that we will see dips on the way up again. Yeah, so it might not be perfect 1, 2, 3, 4, 5. So that might be the case where we will not be able to draw nice trend channels or so. I don't know, but overall it should still follow the rules of Elliott wave, because last week I showed a screenshot of the 10-minute chart of the Volkswagen squeeze. I know different scenario, blah blah blah, but even there on the 10-minute chart, like you could with the naked eye already detect some of the patterns. Yeah, and if we would spend a lot of time of it, we probably could label it fully. So yeah, so I figured it wouldn't, but I just wanted to ask. It depends on how short they are assuming they are short. A reverse stock split is viewed as the company not doing well in the public eye. Yes, but a reverse stock split would also technically force shorts to cover, in my opinion, because there would be less shares suddenly. Although the shorts would then also be reverse split. So 2 shorts become 1 short position. But yeah, a company would only do that to basically double or increase the price of their stock, because suddenly there are less shares available. Yeah, so usually would be a bad sign. Where can I look to see how our correction zigzag are supposed to look? And also, do you remember what part of the book talked about orthodox, unorthodox? It's actually not explained in the book. In the book, they just mention, especially in the later parts where they look at historical charts of the Dow Jones Industrial blah, 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 they mention that this is the end of the orthodox wave 4 and this is the unorthodox, yeah. So then when you Google it, I actually had to Google it, yeah, because I was curious. So Elliott wave, we already saw that, Elliott, there, orthodox high. And it's obviously what makes sense, yeah. So there, I think that was the page, yeah. So orthodox, yeah. Sometimes the end of a pattern differs from the price extreme level. In such a case, or in such cases, the end of the pattern is called orthodox. So like in our case, our point E here, or wave 4 here, is orthodox because it's the end of the pattern, and the price extreme, yeah, so the price maximum minimum is then basically the unorthodox. So that was the lowest point, 116.9, so that would be the unorthodox point, or wave 4, and the orthodox would be where the pattern actually finishes, which is currently here, yeah. So, and I think, like, yeah, like I don't know, maybe for a native English speaker it's a clear meaning, but for me that really threw me off, because like, and it might have been one of my biggest flaws in my previous labeling, that I like literally always tried to pick the lowest point as the end of wave 4 instead of accepting the possibility that the pattern could be longer, wave 4 doesn't, or wave 2 doesn't end at the lowest point, and yeah, so and yeah, where can you look that up? You can actually, there's a link in the description down below that takes you to this book. You pretty much just have to enter. You can either order the physical copy, or you can just enter your email, pick a password, so you can create a free account and you can read the book online for free. And then there, if you look at corrective waves, chapter 1.7, you see all the examples. And you see how they are supposed to look like in a perfect case. Obviously, that would be a zigzag, and that's then the illustration that shows that obviously that zigzag itself has subwaves. But in combination to that, you can then also, so there are other patterns in there as well, and then you can chapter Elliott applied ratio analysis. So chapter 4.1 then covers ratio analysis, how certain things behave in relation to others, yeah. And yeah, so like, yeah. Yeah, so, but that's for example how we confirmed our triangle, by looking at the ratios, Fibonacci retracement ratios of each of the waves of the triangle, and only our wave E doesn't behave, but the rest fits perfectly and so on. So yeah, but yeah, so, and I'm really surprised people don't know about halts and how I think almost all automatic. I don't know if there are some manually halt. No, they're all automatic. I don't think that there's anything manual. As far as I remember, it was like, you remember from Wolf of Wall Street, where from the movie, during the beginning, the guy drops the phone because there is this bell ringing that basically says, okay, we're out of business. And after that crash, so there was like, I think a 20% or 20 something percent drop in the market in one day. And after that, they came up with the idea to introduce trading halts. And there are different trading halts if the entire market is going down. As far as I recall, there's also a point, but I may be wrong about that, so somebody would need to Google that, yeah. But I think there's also a point if the market drops a certain percentage in the day, the trading is halted for the entire rest of the day, yeah. So kind of, it's to prevent panics. It's to, like, when people start panic selling, to kind of like, okay, shut off the trading for the rest of the day, and hopefully whatever, in that case, like if it really would happen that the market then is closed for the rest of the day, then I would assume that, I don't know, like the president or so of the United States goes on TV and makes a statement that calms people down or aims to calm people down, so that the next day when it opens, that people don't continue to try to sell everything, yeah. It's literally what probably caused the Great Recession in 1930, yeah. That, like, yeah, just panic took over and everybody started to sell, yeah. And with trading halts, it maybe would have not been that bad, yeah. But yeah, people like, I know that I don't know it a lot. So I know there's a lot about options that I can learn. I know there's a lot about candlestick patterns that I can learn. There's a lot about Elliott wave theory that I can learn, and so on. And so I look things up, yeah. I see I cannot trade, and I Google. I try to figure out why not, like what's going on. And most people, however, it's literally, I see it on my other YouTube channel. For example, I made a video about NiceHash, and some guy managed to set up two-factor authentication on his account, but didn't set it up properly, so he locked himself out of the account. But instead of creating a ticket for the NiceHash support to get access again, he spends his time writing a comment on my YouTube video saying that NiceHash is a scam because he locked himself out, and so on. So people, there's actually an amazing quote, or quote about it in the book, yeah. And I really love that. It's on page 209, and it's from Richard Russell. I firmly believe the world's troubles would be solved and the earth would resemble heaven if everyone would take total responsibility for himself. In talking to hundreds of people, I don't find that 1 in 50 holds himself up, takes responsibility for his own life, does his own thing, accepts his own pain instead of inflicting it on others. This same refusal to take responsibility spills over into the financial sphere. Today, people insist on their right to everything, as long as you and I pay for it. There's the right to work, the right to go to college, the right to happiness, the right to free meals a day. Who promised everyone all those rights? I believe in freedom of all kinds, except where freedom becomes license and inflicts damage, but Americans confuse freedom with rights, yeah? And it's kind of like that so I make mistakes, I own up to those mistakes. I realize I did something wrong. I made a mistake and I try to learn from it. The average person out there, they never make mistakes. It's always like whatever, like they're unhappy with their job or whatever, they don't get a raise, so their boss has to be a dick, yeah? It's not that they maybe don't work hard enough or participate or whatever, yeah? So whatever goes wrong, there's always someone else to blame. It's never their own fault, yeah? They are I don't know, like financially average or poor, it's not their own fault. It's somebody else's fault. Everyone else has it so easy, but they have it so hard, and so on, yeah? And that's the same thing with like trading halts. Like instead of like, I don't know, asking, so like eToro newsfeed is there the best example. Instead of making a post, can somebody explain to me why I cannot buy or sell right now? And I'm sure some user that knows it would say it's called a trading halt and maybe even share a link to it, yeah? But people are more like, it's never their own fault, it's not their own shortcomings, it's not their responsibility to learn or do anything. So as a result, as a result, there are then countless posts about, yeah, like eToro is a scam, like why do you not allow us to buy or sell? It's a scam, blah, 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 yeah. Like, yeah, so blah, blah, blah. I don't know if there's some manual, we had that. Well, I remember PLL did a manual stop on their stock for trading. Yeah, for news. So when there is like news that likely, so there are some scenarios where when you publish news that likely has a huge impact on the stock, then the trading might get halted. But I think in that case, they have to kind of like file it or announce it to the SEC, and the SEC takes care of the halt. So it's not that you as a company could do that, yeah. And yeah, these fines are just viewed as the cost of doing business for them. Yeah, so for Citadel, literally, it's insane. Like if you look into, there were a couple of posts on Reddit about it and so on. If you look how many violations they have, where they just pay the fine without admitting any wrongdoing. Yeah, so that's I think legally an important part, and where the fines are just ridiculously low compared to the profit they took from violating the rules. Yeah, but yeah. In the stock market, when a triangle occurs in the fourth wave position, wave 5 is sometimes swift and travels approximately the distance of the widest. Yeah, but that's not it. That's because of a triangle, yeah. But there is also, because if we would go from a triangle up, hourly chart, then I found myself as well, because then the problem would be the widest part of our triangle is actually this here, yeah. So, and if we move this far, it doesn't get us anywhere, so it wouldn't make a wave 5 or anything, yeah. Because our correction is not a triangle alone, our correction is a triple free. So if it would only be a triangle, then it would likely be like this. But because our correction here is a triple free, I remember that I read it somewhere, but I just cannot find it, yeah. So or maybe I really just read the same part and my mind mixes it up and also applies it in some way to triangles, yeah. I'm sure somewhere in the book we could find the right ratio to determine the end of wave 5, but in any case, if we are now focusing more on the right look of waves, it is not that important, because then we can at least know that our price target for wave 3 should be on the line of this trend channel or result in a throw over, so slightly beyond it and then correct. Yeah. And yeah, so cool, thanks. I'll have to Google it and read about it. I finished reading the book, but didn't know about orthodox, unorthodox. Yeah, for me also, like I read the word, like when I read the book, it said orthodox, yeah, and I just figured it's like, I don't know, like I don't know what the word, I didn't know why that word was important until eventually actually thanks to Mario. I'm not sure if he's here today, I haven't seen any messages from him, but basically thanks to his, like, okay, but what if wave 2 is out here, yeah? So eventually it kind of, my brain registered again, okay, there was something about unorthodox and orthodox, and yeah, so. People are afraid to sound like an idiot, perhaps, yeah. No, I don't think it's that, you know, because like, if you take all the stream recordings of my stream here, I'm sure you can make a compilation of ridiculously wrong statements that I made, yeah, that I may have not known at the time, that I may still not know, and so I don't think it's about that. I think it's in general that people, I think it comes down to everybody wants to be the best, everybody wants to know everything, nobody wants to look like an idiot, but from my perspective, if somebody posts like a stupid question, yeah, like, I don't know, like, why is trading halted? I know the answer, and to me it may seem like an obvious question, yeah, or where can I check pre-market prices, which in my opinion is a stupid question, because you can literally go to Google, whatever, like stock, so GME pre-market, and Google will tell you where you can check it. So Google will either show it even here, or you will find search results for the pre-market price. Yeah, so asking that is kind of a stupid question, but it's also one that, like, yeah, whatever, like I can quickly copy the link to investing.com or MarketWatch and share it, or in my case, I prefer investing.com actually, and share it with that person. So it's not that it's like taking a huge amount of effort for me to answer that question for whoever is asking it. However, if on the other hand, somebody would post like, what are all you idiots talking about? The stock market isn't even open yet. Yeah. So if other people would share the pre-market price, yeah, then that I would consider like being an idiot. Yeah. Like instead of doing some research or looking it up or something like that. So I don't know. It's hard to say. But the result still is that the average person, like doesn't put in any effort. And I think it's also the reason why Elliott wave principle works, because the average person follows mass psychology because they don't bother to do their research. How many people do you think hold GameStop shares because everybody's talking about them and have no clue how far it could go, what's the current short interest, what profit targets are reasonable, and so on? I mean, not that we know all of that, but we think about it. We ask ourselves, like, how far can it go? Where's the next stop, and so on? Yeah, how far can it fall? And yeah, and those are the same people that as soon as you have a little bit of a red movement, panic because, oh my God, I'm minus 10% on that position, and that then take the loss instead of sit it out and wait till it recovers. So it's like, the other people I live with are exactly like that. Yeah, most people are like, it's like, to be honest, for example, for my wife and me, our biggest issue is actually connecting, like finding proper friends that you can have. Like, we have a few, so it's not that we have. What, I can share whatever I want on my channel. My wife doesn't. So my wife is not happy, so no happy life anymore. But it's like a challenge to find the right people that have an open mindset and are not like most people are, in terms of like, if it were so easy, everybody would do it and stuff like that. Yeah. So it's like, yeah, most people are like that. But that's also like why most people will never achieve wealth. It's literally, yeah, if you want something that you've never had before, you have to do something that you've never done before. Yeah. And led to them trying to day trade GME, and they lost a lot of money. They learned the lesson pretty quick. Yeah. Yeah, I would also like, I mean, I'm tempted to day trade GameStop. Yeah, I did it before we went up here a little bit, and then we had the buying restrictions, and then I stopped the day trading, mostly because I was afraid if I sell, I will not be able to buy back in, and I missed the big upward movement. Yeah, and I was tempted here when I got a prediction that we will drop to 130, 140. Should have done that, yeah, but could have turned out as a wrong prediction, yeah, like, or maybe we fall a little bit short. And I'm thankfully that I didn't try to day trade our corrective pattern here, because that obviously would have been a nightmare. And yeah, so what's the point when you know, when you literally know that the overall price target is like more than 5 times the current value, yeah, to try to squeeze out a few extra dollars or shares. Yes, if you really get it right, you end up. There's actually one part in the book that mentions that like for a certain period in the Dow Jones, if you would have just bought at the beginning of wave 1 or so, till wave 5, you would have 100% profit, so that would have been 100. And if you would have traded the waves perfectly, you would have had 161% profit. Yeah. So yes, you would have 61% more profit in that case, but for that you would have had to trade every top and high perfectly. So, and how big is the chance that you do that? And especially when it's about to go up, like, I don't know, like it could shoot up, could go slowly up, but what if Elliott wave predicts that the low here is at 100, yeah, and so we would have sold our shares here and set our pending buy order here at 100, and then it doesn't reach 100, yeah, but it turns around at 116, and we are not sure about the pattern, if it will drop further or not, so we don't just buy back at 140 and so on, and eventually we miss the whole movement. So like we get super excited here, oh my God, it's back at 200, should I buy again? It would still be better, or will it still fall to 100? and then you see this movement, it starts to go down, you start to hope again that you will see the 100, and then maybe it starts to take off and you have the profit that you took here, but you have 0 shares anymore. Yeah, so like, yeah. My point being, they did this just because people said it will go up now. They didn't do their own research. Yeah, yeah. I think that's the point. Like, I don't know. Like, if you invest, you always need to do it because you. I mean, you can listen to others. You can look at how they justify their opinion. Yeah, like what kind of facts or theory they use for it. And then you can consider yourself, does that make sense to you? And then either buy or don't buy or sell or hold or don't, whatever, yeah. And I think the best example that I had was actually a comment on Reddit, which resulted, or which caused me to not reply to comments on Reddit anymore for now. It was literally a guy, oh no, it wasn't on Reddit, it was on eToro, sorry. And it was literally a guy, there was one guy that said like, GameStop will go up. Then there was a comment that says you should sell, it's only worth $20. And then one guy replied to that dude that said $20. And I left also a reply, which was obviously meant for the guy about $20, and said like, you couldn't be more wrong. Watch that video. And I linked the video from Jeffrey Kennedy with his Elliott wave labeling and so on. But somehow that first guy, so that first reply that already told that super, I don't know, like dumb dude that thinks GameStop should be $20, thought I was talking to him and was super offended about that I said you couldn't be more wrong, yeah, although it wasn't meant towards him. And yeah, I'm not gonna watch the video of some other dude, and Jeffrey Kennedy has more experience with investing and Elliott wave theory that I'm years alive, yeah, but some other dude, because it's just his opinion, yeah. So, and I just said, well, you do you, but in my opinion, to not look, or to not at least look at other perspectives that other people provide, is the same as a I know everything mindset, yeah. And yeah, so I think it's nothing wrong with, or like I really think there's nothing. Yeah, ignorance is bliss. Or it comes, what is it like, not ignorance, but also not pride. What comes before the downfall or before the fall? In German it would be Hochmut. Yeah. But I think it's like important to check alternative theories and how things fit together. No, not denial. My wife says arrogance.
The dictionary says arrogance.
The dictionary says that my wife says arrogance.
Oh, loftiness.
Loftiness.
Whatever it is, or pride.
Pride. Pride, okay.
Yeah, like pride and arrogance.
And what's the last one?
Arrogance, pride, loftiness, disdainfulness. I don't think.
Disdainfulness, what a fancy word. Yeah, pride comes before the fall, yeah. And yeah.
Goes before a fall, and in German, Hochmut kommt vor dem Fall.
Actually, you would translate pride as Stolz, or not?
Yeah, I know.
Yeah. Yeah, okay. But yeah, so on the small time frame, it looks like, I mean, we don't know, but based on all the patterns we have, that maybe we start our upward movement from here slowly, yeah. And pride come before a fall, yeah. I think the saying is short attacks come before the fall. No, they actually, if we would have to wait till fall, would be very long. But I know you mean the fall and not fall, the season. So you must be confident before you trip. I think it's a thin line, and it's like challenging, you know. For example, to have confidence in your own opinion, but also be aware that you don't know everything. Idiots do exist, they're called bigots. Not everyone wants to be corrected. Yeah, like, I mean, I don't know. I also don't like critics. Of course, like if I label a chart here and some of you guys say, okay, I labeled it differently, take a look. I'm not super, oh my God, somebody is proving me wrong. Great, yeah, like I'm not super excited about that. But I don't know, like then take the high road or see the bigger picture, or however you want to call it, that in the end, if the labeling that any of you provides turns out to be the better one, yeah, it actually helps me, and it helps me to learn, and it helps me to make better decisions. So why should I be like, oh, that's just your opinion, but this is my YouTube channel, so go and take your opinion and put it where the sun doesn't shine, yeah? It doesn't help me, it doesn't help anyone. So it's, I don't know, we are all just floating in this cosmic jacuzzi. Yeah, I think most people are, but that's also, if you read the Elliott wave theory and parts that I skipped earlier because they didn't really talk about the waves and the rules and so on, yeah. But it also mentions like that in order to take advantage of human mass psychology, or I mean, it doesn't say it in that sentence, but that's what I recall, so how I recall it, you first have to understand how it works. Only if you understand how it works, you are able to basically use the system or play the system in your favor. Yeah, and the same is there. It's like, and it's in every part of your life. You see, I think we covered that topic already like a couple of times. Like you see people that want to have a better life, that want to have more money or so, but they're not asking themselves like, how can they get there? Actually, Rich Dad Poor Dad, the book by Robert Kiyosaki, brings that nicely to the point that poor people ask the wrong question. Like a poor person sees, for example, I don't know, a Ferrari, and oh, that's so expensive, I cannot afford it. And a rich person, in terms of the mindset, so not of the bank account, but mindset, sees, oh, that car is so expensive, how can I afford it? What do I need to do to afford it? Yeah. And so the poor person already basically mentally accepts that they will never drive a Ferrari if it is what they want, but they accept that it will never happen because it's so expensive and they cannot afford it. Whereas the person with the rich person mindset accepts that it is expensive, but actively asks, what would I need to do to be able to afford it, and looks for a solution to the problem. Yeah? And I think the same is like here, like when we look at Elliott wave theory, I think it's easy, especially one of the problems likely is that in the beginning it looks so easy. Okay, you have 1, 2, 3, 4, 5, how hard can it be? And then you have an ABC, how hard can that be? Until you stumble upon corrections like this one, yeah? But because you think it's so easy, you may end up labeling things quickly because, oh, that's so easy, yeah? And like we did partially in the live streams, like I did definitely before I started the live streams. So you label them wrong, you make your trades based on that, the trades turn out wrong and you lose money, and then your conclusion would be, well, that Elliott wave theory is garbage because if it were so easy, everyone would do it, yeah? Instead of, okay, maybe I didn't understand it fully, let me read that book again, or let me, I don't know, maybe even pay for the Traders Classroom membership to have somebody that has years more of experience show me some better examples so I finally grasp it or something. So yeah, so it's really, in my opinion, like I don't know, like many people may not agree with that, but in my opinion, most of our lives pretty much depend on your mindset, on your head. Like I think Jeffrey Sachs said it best, history is written by the rich and so the poor get blamed for everything. I don't think that the poor get blamed, yeah, but I think that they just, one thing I noticed on the Philippines, for example, so when I lived there, yeah, so there's a lot of poor people and they are super religious, yeah, so, and when I talk with most successful people, they still have a belief, so they believe that there's a higher being or so, but they're not super religious. And in terms of super religious, I mean that the wealthy people, business owners and so on that I know, when something goes wrong, they take responsibility. They look for, okay, what did they go wrong? Could they have prevented it? Could they have done anything better? Whereas poor people very often, if something goes wrong, well, this is a test from God, yeah, so not even trying to figure out how it could have been prevented or something like that, yeah. And also when things go well, it's like a common saying to say thank God instead of maybe wonder, maybe you deserved it because you put in effort, yeah. It's well, in this instance with the FUD, yeah, like they are definitely like there it's really about blaming other people, like not short sellers not taking responsibility, but trying to blame the retail investors that try to trigger the short squeeze on the situation, when in fact they made the decisions to short the stocks so heavily, but yeah, publicly are refusing to take responsibility and try to shift the blame on the poor people. There definitely that applies 100%, yeah. And yeah, so I think like mindset plays a huge role. Like also one thing I noticed is like when I was still working in e-commerce consulting and freelance developing. So back then I was in touch with like not on daily basis, but regularly with up to like, let's say 100 e-commerce companies in Austria and Germany. And I noticed that the business owners very rarely got sick. Like if at all like once per year for a few days where they would be, like have a like small fever or like flu or something like that, but very rarely, whereas their employees compared to them were sick more often, yeah. And I also noticed the difference. Well, like when I visited some of those companies, maybe during fall or so, the employees would be, oh my God, it's flu season, oh my God, blah, blah, blah. And the business owners, they didn't even think about that. They just thought like they took care of their business and their life. They didn't worry about like, oh my God, it's flu season and so on. And so I think there is a certain law of attraction, and that a lot of things in your life you really can influence simply by having the right attitude and the right mindset. And there's a reason why there are sayings like, or quotes like, how does it go? Like, no matter if you say you can do it or you can't do it, you'll be right. Yeah. So, because if you say you can't do it, you will not really put in effort to find a solution or the way. And if you say you can do it, you will put effort into finding a solution, and you likely will eventually find one. It may not always be the perfect solution, but it should get you towards the next goal that you have. Yeah. And yeah, so I think the problem is simply, and I don't necessarily want to blame the majority of people, but the educational system that shapes them in that way. Yeah, so that teaches them, like, if you think about it, like when you, I don't know how it was in your country, but when you grew up in Austria and you go to school, your parents tell you you need to have good grades so you can get a good job at a big company. Yeah, like, so it's literally, nobody ever teaches you, you need to like make sure that you have basic understanding in multiple fields so that you eventually can start your own business and be super successful and financially free. Yeah. If you were to say, I want to start my own business, you especially when you're still young, like 18, 19, most of your relatives would likely often say like, are you crazy? Like, why would you take that risk? Yeah. Instead of because they are conditioned into have good grades, get a good job, work till you're 60 and retire, but never really become financially free or your own boss. Yeah. And I think the educational system is to blame, and then as a result, our own parents, in quotes, because they were conditioned with that system, and they then basically also applied the same limitations to us as children. And yeah, so, but that's, yeah, like just my perception of how things work and where I see parallels, like between when I talk to average people financially or in their career average, and successful people, where I see like things that are common for the average people in terms of mindset, statements that they make, and things that are common for successful people. Yeah, and the same then applies with investing or so, where likely the lazier person that wants to get rich quick doesn't understand that there's no such thing as like money for nothing. Yeah, that I don't know, just buys because there's a hype around GameStop, and once it dips 10%, panic sells, and then buys back in higher because somebody else or 5 other people tell them, why did you sell? Yeah, and so on, and basically loses money on a trade where it's almost impossible to lose money, in my opinion. And yeah, other people have a different mindset. They see that there's a hype around GameStop, but instead of just instantly smashing the buy button, they actually end up doing a little bit research first to see if they agree with that overall sentiment and want to invest or not. Yeah. Disconnected there. Yep. But yeah, so that's how it looks. or that's how I see things. Yeah, maybe you guys disagree with some of that, perfectly fine. Everybody has the right to his own opinion or their own opinion. And yeah, one thing that helped me a lot in my life, I have to say, is because that's where we started, is actually being self-confident about the things I can do. So for example, I'm a very good web developer, and there are, like, at some point I had a client literally pay my plane tickets from the Philippines because he didn't want to work with anybody else. Yeah, so I have like enough events in my life that prove that I'm good at what I do in certain areas, but I'm also aware that there are countless, or maybe not countless, but there are enough web developers that have way better skill than I do. Yeah? I may be already okay with Elliott wave theory, but I'm aware that there are people, and even among my viewers, like, I'm not like, okay, you guys haven't heard about Elliott wave theory before I wrote a post, so why do you think you can now educate me? I'm aware that even among all of you, well, maybe I still overall have a little bit more theoretical knowledge than each one of you if you just started, but maybe each one of you already understands certain patterns better than I do, and so on. So, and yeah, no matter what I do, so all the business stuff that we have, like the programming, the YouTube channels that we have, and so on, while I'm happy with the results that we have everywhere, and all the results would actually confirm that I'm not that bad at those things, I'm always aware that there's at least somebody out there that's better than I am. And so whatever my opinion is, I'm always aware that there might be an opposing opinion that actually is correct. So, and yeah, like, and that personally helped me because it makes, or it leads to me, or leads me to not kind of like insisting that I'm right. Yeah, like, it also makes it a little bit tricky because obviously it's then in the stream, so I'm not like, okay, that's the wave pattern that I came up with and that's it, because it fits perfectly and no other wave pattern can be valid here anymore, and I'm certain, yeah. But it leads to me saying, okay, that's now the wave pattern that makes the most sense, and I honestly cannot come up with anything that fits better, but technically there could still be some pattern that fits better that I just can't see. So, which means it's the same like saying, okay, well, either I'm right, the price will go up, or I'm wrong and the price will go down, which is not much of a prediction. Yeah, so, but considering it, all I'm really saying is that's based on my knowledge and based on how things develop and how many other variations we try to label so far, the one pattern that makes the most sense. However, somebody else with more Elliott wave theory experience, especially when it comes to corrective patterns, might look at this chart and see something completely different that fits even better. And yeah, so, but yeah, so I guess that's where we are now, right now. And I think based on the sideways movement, that's where we're gonna call it a day, because it's already getting 7 here and I still have to edit some videos. To summarize what we did today, I already on the weekend changed our labeling a little bit. So we moved our wave 4 from here and decided that actually the whole correction wasn't just a zigzag, but is a triple three consisting of a zigzag, likely a flat, or yeah, should be a flat in the middle, and a triangle. And the end of the triangle, because a triangle can only occur, or like in so many cases should occur always as the last corrective pattern before the 5th wave, which would indicate that this low that we have here is as far as it gets, and from here we go up. Now, if we think in terms of trend channels, one might make the case theoretically that we could, yeah, that doesn't make sense. No. I think it's as far as we go, like, I mean, plus minus, let's say $5 or so. I think really that's as far as we go, and from here we'll have our wave 1, 2, 3, 4, 5 developed that takes us basically above the $1,000 range. Now, if we stay within the trend channel for this, for this 1, 2, 3, 4, 5 wave, it would technically mean that the first point where we could reach 1,200 would actually be in May. Obviously, if we would have a squeeze, or what I actually expect that we have, if I need to look that part up, but I expected that we will have something called a throw over, where wave 5 exceeds this trend channel, which would actually align with a squeeze, then we can have it sooner. Yeah. And yeah, so the prediction for this week would actually be that we just move upwards. Not sure how long that upwards movement goes, but that's where I think we stand right now. And while on the hourly chart that still doesn't seem very likable or plausible, maybe we actually have our bottom here. Yeah. That's a nice quote. If the penalty for a crime is a fine, then that law only exists for the lower class. I partially agree with that. However, if fines would be as a percentage of your yearly income, so not of your salary, because if you are a business owner, you have a salary, but at the end of the year, you get a pile of profit on top, yeah? So if a fine would be a percentage of your yearly income, so if you're poor and whatever, the fine would be $3 for you, but if you are, I don't know, like, whatever, like Warren Buffett or Jeff Bezos, the fine would be $30 million, yeah, or $300 million, or I don't know, $1 billion. Then it would work. Yeah. I'm not 100% certain, but I think in Switzerland that's partially the case for speeding tickets, and that's really like in Germany you have the Autobahn, which is partially with unlimited speed limits, yeah. And you have a lot of people, even in other areas, drive way too fast, because if you have a sports car, you can easily afford the fines, yeah, to the point where you might have to hand in your driving license for a month or so. However, in Switzerland, I don't know anybody that's speeding there, like even a few kilometers per hour too fast or miles per hour too fast, because the fines are stricter, yeah, so that even if you have a decent income, they will hurt you a lot, yeah. Or even if you are wealthy, they will hurt you. Yeah, and I think that would solve a lot of problem if all fines would be as percentages of your income. Obviously, it would be more an administrative effort to calculate them. If suddenly a parking ticket is not just okay, please wire $20, but is like okay, looking up the owner of the car and then or trying to determine who was driving on that day or something like that, looking up their tax records and so on, but yeah, if you would then have something like, okay, if you break this regulation or you break this one law or rule, you have to pay 10% of your monthly or yearly income in a fine, then even rich people would follow the rules, yeah. Because you might at first think, yeah, whatever, but if you suddenly lose 10% of, let's say, yearly income, yeah, just because you did something wrong, maybe, I don't know, like littering, throwing trash on the road because you don't care, yeah, you probably would never do that a second time. Yeah. And use last year's taxes, yeah. But there it depends then again on each country, like how long you have the deadline, yeah. For example, you don't file last year's taxes on the 1st of January, so how do you treat all the violations that you do from January till you actually filed your tax returns? Or do you then only kind of like wait till the tax return is filed and then the person gets like 20 fines at once? Or like, I mean, it's anyway wishful thinking, it's not going to happen, but that would be the one way where a fine actually would apply to rich and poor the same. And yeah, and then you'd still have to consider that even if you use your tax returns, yeah, as a rich people would still have an advantage, because technically you could hide some of your profits in a foundation, yeah, and stuff like that, so that you still gain benefits in some way, but it's not financial benefit. So there would still be some loopholes that for wealthy people and business owners would make the fines less harsh, but overall it would be a good start if, like, based on whatever profit reported for the person in the last year, okay, you were driving too fast, parking wrong, littering, doing trading violations, yeah, there you go. But yeah. So yeah, anyway, I have to go, and as said, I actually expect that, considering that we had sharp movement down here and now it's kind of like moving sideways again, that we won't see it go any further. Also considering that our max pain price, so where basically the puts suffer the most, would be 145. So it might stay below that 145 for a little bit, but I actually would expect that we'll break through and then build on a bigger time frame, of course, so like hourly in that case, that we start to build the 1, 2, 3, 4, 5 that eventually takes us up to here. Now, obviously, we have a lot of ground to cover from here to here, so it will not have, in terms of price, not time. So it will not be one huge movement, and we still need to fit 5 waves in there. So hard to say how big those waves are going to be, but we're going to have to wait to see at least 1 and 2, and then we can map out the rest. So, but yeah, so. Also, in case you haven't noticed, the next stream now this week is scheduled for Friday. I would, if something really changes, just spontaneous schedule, or not spontaneous, but schedule a stream in between, maybe on Wednesday. But if it plays out like this, so if either during the rest of today or tomorrow we start to move in this direction, then we would have the next stream on Friday. And in between, you can always also jump on the Discord server. I'm going to look up the link. I'm not sure if I have it in the description. Probably not. No, it's not there. So I'm quickly going to grab the link to the Discord server so I can share it with you guys. And there, if you want, you can join. And there we can also, in between, discuss changes, different labeling and all that stuff. My channel. So should be this link here, and here we go. So yeah, Discord, paste, should be this one. Let's check. Yep, so obviously, as mentioned, that Discord is actually for another YouTube channel with another audience, so quite different people, also nice people, most of them. Some actually are in the I want to be rich quick and do nothing category, unfortunately, can't help everyone. But yeah, so if you scroll down on the Discord, you'll find the investing and trading section, and there a separate channel for Elliott Wave Theory, where we can, not only about GameStop, so also if you analyze other stocks and label them, feel free to just share your screenshots, and then we can discuss, yeah, like if the patterns make sense or if maybe something else makes sense and so on. Yeah, so thank you guys. With that, I wish all of you a pleasant week. Fingers crossed that we only see each other on Friday, because it would mean that things start to play out like this. And yeah, so have a great rest of the day or night in some cases, or morning. And yeah, see you soon. Bye-bye.